there is a very bearish setup of the investors going into the election day.
As the presidential race goes, probably those Senate races go.
The polls are razor thin in the states that matter, in the communities that matter.
There's a very big difference between what voters in the swing states feel are important issues.
There's a lot of conflicting signals, most of which are showing this to be a tie or toss-up race.
This is Bloomberg Surveillance with Jonathan Berro, Lisa Abramowitz, and Anne-Marie Hordern.
Deep breath. This could be a very long week. Live from New York City this morning. Good morning. Good morning. Bloomberg Surveillance starts right now. The day has finally arrived. It's Election Day 2024. And here are the scores. Equity futures on the S&P 500 elevated by 0.2%, up by a third on the Nasdaq 100. On November 3rd, 2020, 33.69 on the S&P 500. We've come a long way. We've come even further in the bond market. 2-year, 10-year, 30-year. The 2-year 4 years ago, 16 basis points. Right now, 417.23. It's been quite a journey.
And this is the reason why the bond market is at the epicenter of a lot of the expected volatility. We are at such a different moment, post-pandemic, post-inflation surge, post all of the stimulus that got pumped into the economy that surged some of the debt levels. So it raises the question, how much more oxygen in the room is there for any of the proposals that we're hearing on either side of the aisle?
The eyes of the world on 7 swing states. I think we need to talk about the process, why this evening could be long, why this week could be even longer.
Well, it could be long because it could take a long time to count all of these votes. You already have 83 million Americans who've already went out and voted. Some of those are early voting. Some of those are mail-in ballots. Maricopa County. If it comes down to Arizona, we might be here for 10, 13 days, as those election officials told us that will take them to count those ballots. So in 2020, the election was called 4 days after the election. It was called on a Saturday. In 2016, it was called the following day. If they're quick, maybe we get it in the middle of the night. What was it, 3 a.m. in 2016? If it's 2020, it's going to be a few days.
We're all conditioned by experience. I think the problem is that over the last 10 years, we've had two very different experiences. Back in 2016, the polls missed that big move, that big shift towards Donald Trump. In 2022, for the midterms, we sat around this table and talked a million times about the importance of the economy. It's about the economy. It's about inflation. Republicans are going to wipe the floor with the Democrats. And then it was about something else. It was about abortion. And the Democrats held steady.
Implicit in your comment, which is the right comment to make, is that we don't trust the polls. And there is a feeling in the polls that this might be the closest election ever in history. And yet what we get the sense from a lot of even pollsters, Nate Silver, for example, coming out and saying they are crowding. They are doing things with these polls that basically don't make sense to me. They are basically only revealing the polls that agree with the general narrative that we have, which was the reason why the Ann Seltzer poll was so interesting in Iowa. She said, it surprised me too, but we can't just choose what we publish. We have to publish the data that we actually get.
If the Ann Seltzer poll is correct, you're going to see a pink wave from this election. This is the first presidential election after the Dobbs decision. And while, yes, the economy has maintained the top issue, is that what people in the voting booth go and end up voting on? We don't know yet. If it comes down to the economy, Oxford Economics says in one swing state of Pennsylvania that everyone is focused on, that a mass amount of money has been spent on, a mass amount of time from both these candidates. If it's inflation and the cost of living, they say Trump wins by 90,000 votes. If it's something else, is it Dobbs? Harris wins by, they say, 70,000 votes.
That's your day ahead. Here's your next hour. Coming up on the programme, Julian Emanuel of Evercore saying the bull market will continue past the election. We'll catch up with Rob Casey of Signum Global Advisors as Harris and Trump make their closing arguments. And we'll speak to Veronica Clark of Citi, calling for a 50 basis point Fed rate cut in December. We begin this hour with Trump and Harris locked in a dead heat on Election Day in America. Polls showing a tight race across these 7 key swing states that will likely decide the election. Let's get to our team coverage of the Trump and Harris campaigns with Bloomberg's Tyler Kendall in Florida and Skylar Woodhouse in Washington, D.C. Tyler, describe the mood in Florida going into this one.
Yeah, good morning, John. We are here in Palm Beach waiting for former President Donald Trump to touch down early this morning. This is where he's expected to rally his supporters later tonight for an election night watch party as those results start to pour in. But before that happens, though, he also has something else big on his agenda, which is that he needs to vote himself. He's a registered voter here in Florida, of course, and opted not to early vote despite previously waffling on the issue. And nearly 82 million Americans already casting ballots heading into election Election Day. But it is clear that he is going to use this as an example to supporters because at this point in the race, it is all about turnout. Now, we heard him use his final rallies going into today to urge his voters to get out to the vote, but also to air some grievances in what appeared to be a final push by his campaign to capitalize on what they see is a dissatisfaction among voters with the status quo. I can tell you, John, that our most recent Bloomberg News Morning Consult poll shows that 68% of likely voters in the 7 key battleground states say that the country is on the wrong track. Whether or not Trump convinced enough voters that he is the one to fix that remains one of the big questions heading into today.
Scarlett, let's bring you in. What's the closing message for the vice president?
The vice president yesterday campaigned all day in Pennsylvania. She put all of her final efforts in the Commonwealth, key battleground state, to determining who will return to the White House. And one thing I want to highlight that I thought was particularly interesting is yesterday, during one of her campaign stops in Pennsylvania, she went to a Puerto Rican restaurant with Representative Alexandria Ocasio-Cortez and Governor Josh Shapiro. Now, she went to this Puerto Rican restaurant because her campaign, Democrats, have been trying to make those final inroads with the Puerto Rican community, which has a large presence in Pennsylvania, and they're trying to play some catch-up against the Republican Party and Donald Trump as they have made significant inroads with the Latino community, Puerto Ricans. So the campaign is trying to play some catch-up, and I did think that was interesting last night that, you know, as the clock was winding down, that is a stop they committed to. But also in her closing argument, she was really focused on the contrast between her and former President Donald Trump. And she's really leaning into that as she, you know, makes those final speeches, does those final media rounds to get that point across to voters that it's either we have a new generation come in and, you know, take over the White House, or we go back to the former President Donald Trump. And she has really tried to lean into, you know, preserving democracy to lean against what Donald Trump Part 2 could look like.
On the final push, Skylar Woodhouse alongside Tyler Kendall. To the both of you, thank you. Equity futures on the S&P 500 higher here by 0.2%. Joining us around the table, Julian Emanuel of Evercore. Julian, good morning.
Good morning.
What are you telling clients about this one? How different is this compared to other election cycles you've lived and traded through?
So the first thing to say is there's been a lot of hand-holding because the partisans that we talk to, both the Republicans and the Democrats, feel as if, you know, if the other side wins, that there's a potential that you get a series of negative events that could adversely impact both the markets and the economy. And the fact is, even though the polls are as tight as they are now, the evidence doesn't support that in the least. Interestingly enough, when you've had, and this feels to all of us, maybe because of the social media saturation, et cetera, that, you know, this is the closest race in history. It's not. There have been a number of races where we come into November and the margin is 2, 1, or 0. I guess this one is 0, probably. And guess what? The stock market has gone up into year-end 6 out of 7 times. People put their partisan hats aside and recognize the fact that we're in a good earnings cycle, we're in a good economic cycle, and the Fed is going to cut rates.
This really is the tone that I've heard in so many different strategist notes, that essentially the economy is doing well. We're coming from a good place. Companies are earning. Everyone's holding their breath, waiting for an outcome, and then they can keep on going with what they were doing before. How offsides would this market be if there were a surprise, whether it be a sweep or whether it be, say, a contested election that drags on for more than a week?
So to us, over the last month or so, we've been making the point that our 6,000 year-end price target, which we've had for some time, is now a probability-weighted number based on whether it's a sweep or a divided and uncontested outcome or a divided and contested outcome. And again, history is informative here. In years where the stock market is this strong this late in the year, the propensity is that you get a performance chase. And if we get what I would call a clean outcome, whichever side wins, that's where you go to 6,000. That's where you go through 6,000. Conversely, if this drags on into next week or the week after, you get a type of sell-off that the kind on the order that we saw in 2000, down 5 to 10 to 12%. which we think will be a buying opportunity.
What's so interesting to me is a couple of weeks ago, or even months ago, people were talking about how this time is different and that this election cycle is somehow going to set the trajectory for the next 12 months. It could potentially make the difference between a 10-year yield at 5% or a 10-year yield at 3.5%. It could necessarily mean the difference between an investment cycle and not. Are you saying that's not true? That as long as we get a clean outcome, the trajectory for equities and the trajectory for the economy is pretty much going to be the same?
Look, we know that both sides' policies are likely to expand the deficit. Okay, that's very clear. It's likely to underpin inflation. That's certainly part of the narrative as to why yields have risen. But if you think about it, it's also the fact that down to 3.6% in September, you were pricing in a recession, and there's no evidence of that whatsoever. And then the other thing to us is very informative here. There's only been one other time in history where the Fed has cut interest rates and the 2-year yield has risen in the manner in which it has risen over the last month and a half. And that was 1995, a pretty darn good time for stocks. We think that's going to continue.
Julian, I want to come back to what you said about you don't think this election is close. But historically, 2016, 2020, they were close. Trump won the blue wall with 77,000 votes in 2016. That's as close as you can get.
No, we do think this election is close. What we're saying is this is not the only one that is. But 2012, you came in with not knowing between Romney and Obama. Other elections similar. But the point again being that, and I will tell you, we spent the weekend in Battleground, Michigan, in a suburban community in Detroit, where you had Harris Wall signs, and 20 feet away the next yard were Trump Vance signs.
Were you counting?
It was very, very even. But those people are going to put their signs away and get on with their lives in a couple of days.
This has nothing to do with the markets, but since you were there, what was your takeaway?
I got my Susan B. Anthony dollar. Let's flip the coin.
I'll tell you a company that can't wait to see the back of this, Marriott International. The CFO said this about hotel bookings. A key measure of hotel demand declining in November by double that of past election cycles. This is really weighing on business activity this time around.
Why make a bigger statement about what you're going to do, regardless of whether it favors one or the other, if you're going to become potentially a political punching bag, which we've already seen has come up with different corporate actions. I'm thinking of Nippon Steel. I'm thinking of even Ford and their factories down in Mexico. It is very difficult to make a bold move at a time where everything can become a meme for a political campaign.
Julian, it's good to see you. Appreciate your time. You staying up late?
I think so.
OK. Julian Emanuel of Evercore, thank you, sir. Equity futures on the S&P 500 up by 0.2%, with an update on stories elsewhere. With your Bloomberg brief, here's Danny Berger. Hey, Danny.
Hey, John. European and U.S. intelligence officials believe Russia is behind a plan to place incendiary devices on cargo planes bound for North America. German security services think a parcel that caught fire at an airport in July was probably planted by Russia. The officials tell Bloomberg they're taking the alleged plot seriously and expect Moscow to attempt similar acts in the future. Last night, Joe Rogan announced his endorsement for former President Donald Trump. In a post on X, the popular podcaster praised the, quote, great and powerful Elon Musk, saying he made the most compelling case for Trump you'll ever hear. The endorsement could offer a boost to the Trump campaign, given Rogan's popularity among young men. Palantir shares, those are surging in the pre-market trade, up 13%. It reported quarterly revenue that beat analyst estimates. It also raised its forecast for operating income in the current period, citing higher demand in the U.S. for AI software. Shares of Palantir, those are up 140% so far in this year. And that's your brief, John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, it's Election Day in America.
With your vote tomorrow, we can fix every single problem our country faces and lead America.
It is time for a new generation of leadership in America.
The closing arguments up next, live from New York City this morning. Good morning. Equity futures on the S&P 500 up by 0.2%. In the bond market, yields lower yesterday, a little bit higher this morning, up 2 basis points. The 10-year 4.30.90. Under surveillance this morning, it's election day in America.
My message to Americans tonight is simple. We do not have to live this way. We don't. We don't, and we won't. We won't. We do not have to settle for weakness, incompetence, decline, and decay. With your vote tomorrow, we can fix every single problem our country faces and lead America.
It is time for a new generation of leadership in America. And I am ready to offer that leadership as the next president of the United States of America.
So here's the latest. Donald Trump and Kamala Harris closing out their campaigns in a final push across key battleground states. The candidates coming into Election Day locked in a tie across nearly every major polling outlet. Rob Casey of Signum Global Advisors with a confident call on the race, writing, "Our base case expectation has been and firmly remains that Vice President Kamala Harris will win the presidency at 65% odds." Rob joins us now for more. Rob, good morning.
Good morning.
2016 or 2022? How does this one break?
I think it's 2022. Republicans voting early, better than 2020, but I think Democrats close the gap today.
2022, of course, abortion, reproductive rights on the ballot. They are again this time in places like Nevada and Arizona. How important is that going to be?
Really important. Interestingly, in Nevada and Arizona, we're not seeing women turn out quite as much as we would have expected. Elsewhere, I think abortion is on the ballot nationally. We're seeing that in Michigan, Wisconsin, Pennsylvania, in the blue wall. It's a huge issue. In some states and in some polls, it's as big of an issue as the economy today. And so we're seeing that drive turnout, among many voters, especially women.
So you're optimistic after you saw Ann Seltzer's poll over the weekend. You think potentially this could be a pink wave?
Yeah, well, I think Ann Seltzer is one of the best to do it. And her poll may wind up being an outlier. Of course, it had Harris +3 in Iowa. We don't think Harris is going to win in Iowa, but Seltzer is one of the best to do it. That +3 was driven by women turning out more, older women turning out more for Harris. We do think we could see that across the country.
Older women who remember Roe and now remember Dobbs in their lifetime. What's her path to 270?
Well, the easiest path is the blue wall. It's holding everything constant, sort of the states that will fall blue or fall red. If she wins Michigan, Wisconsin, and Pennsylvania, that's 270 on the dot, as long as she wins the one electoral college vote in Nebraska, which she will. From there, if she loses Pennsylvania, it gets much more difficult, but then she'll be looking to North Carolina, Georgia, Arizona, and Nevada. She'll have to win 2 of those 4 to get to 270.
Out of those Sunbelt states, which 2 do you think is most likely she could keep or flip?
Well, I would say Nevada, which Harris is running much worse in Nevada than she should be, much worse than Biden was in 2020. But Democrats have a phenomenal turnout machine in Nevada. It's the Senator Harry Reid machine. So I think she closes the gap that Republicans have gotten in early voting. Georgia and North Carolina, very similar states. But I think Georgia, we've seen it move bluer and bluer and bluer, in large part thanks to Stacey Abrams, among others. So I think Georgia, Nevada, maybe North Carolina. The one state where Harris really is underperforming is Arizona. Trump is up 2 to 3 points. That's actually a pretty wide gap. We always like to say, or everybody likes to say, it's a 50-50 race. I don't think it's 50-50 in Arizona.
So I don't have any really feeling on this, and I keep thinking about how I have no edge on this. And so when I try to sound smart, I go predictit.org, and I say, okay, well, who's winning? And then I can give a sense of exactly what's going on in markets and understand this. You think that that's all inaccurate. You think that actually the betting markets are completely skewed. Why?
Well, listen, the betting market that is the most skewed is Polymarket, and that's thanks to a trader in, I believe it's France, who's put in at least $40 million. That was the number last week on Trump. Apparently his family doesn't know that he's doing it, but, good luck to him today.
It's like a 10-year-old in the basement. Go ahead.
It's for us, the betting markets are a really interesting indicator of direction, right? Move towards Trump over the past couple of weeks, frankly, have moved towards Harris over the past couple of days. But in terms of actual probability, if you look at the political science research, and I'm not a political scientist, but if you look at the research, betting markets are where they differ from polls, they get it wrong, and polls are more accurate.
Okay, but polls have also been sort of raked under the coals or over the coals, whatever the expression is. I'm just wondering, it seems like people don't trust polls to be getting it right. Nate Silver has come out and he has excoriated the pollsters for basically only releasing results that seem to work with this narrative that it really is a neck-and-neck race. Do you think that that's accurate? Do you think that people are purposely overlaying their actual raw results with models to try to adhere to this basically 50-50 narrative in the market?
Yeah, well, Nate Silver's a lot smarter than I am. So when he talks about polling and process, polling process, I listen. It is statistically improbable that we are getting all of these 48, 47 races in all of the swing states all the time, right? If there's an average amount of variance, we would see plus or minus 3, like we saw in Iowa over the weekend. Pollsters are doing the best that they can, but we have to remember it's a subjective, it's an art and not a science, right? So whether or not they're putting their thumb on the scale, they always have to put their thumb on the scale because they have to decide how they're going to collect the poll, the process for collection, and the process for sampling, who they're going to talk to and who they're going to listen to. That's always an art and not a science.
There's a few Senate races to watch tonight. You mentioned Arizona, so Ruben Gallego, Kari Lake, won. Over in Pennsylvania, Casey, McCormick. What are the others that you're really closely following later this evening?
Oh, yeah, it's Arizona, Ohio, and Pennsylvania. I think that those are the most important for Democrats to hold if they're going to have any shot of holding the Senate. Now, to be clear, at Signum, we don't think that Democrats will hold the Senate. West Virginia obviously goes Republican. We think Senator John Tester in Montana. I mean, it's been a bad bet to bet against Tester over the past couple of cycles. But we think in this election, we're not going to see the split ticket voting that we've seen previously. He loses in Montana, and then so that very quickly becomes a Republican 51-49 majority. Elsewhere, I would look at Pennsylvania and Ohio. And if you want a surprise or at least some upside silver lining for Democrats, you're looking at Nebraska, you're looking at Texas.
Tell us about Texas. Is it possible that Ted Cruz can lose his seat?
Well, listen, Congressman Colin Allred has run a phenomenal campaign. I think he's essentially hitting the ceiling of what a Democrat can do in Texas today. Texas is moving blue. I think eventually Texas will be blue. That will change the entire map. We think Ted Cruz holds on to his seat in this cycle. Allred's running a great campaign, but I just don't think Democrats are there statewide to win. I mean, we saw very similar numbers coming out of the Beto O'Rourke-Ted Cruz race. Beto ran a great campaign as well, wound up coming up short, and in fact was leading in polling more so than Allred has. So we think Cruz wins that seat.
So you think the Senate goes red, but is it 51 or 54?
51.
51.
All of the Democratic incumbents hold their seats. Gallego wins in Arizona, but because of West Virginia and Montana, I mean, Republicans have a pretty easy path to 51.
So all of us are going to be basically not sleeping for the next 24 hours, and you're going to see us in really disgruntled and disheveled form over the next remainder of the week. We also get a Fed decision. I'm just curious, after this whole election is over, which party do you think has the bigger reckoning? What does that reckoning look like? And this is a question John raised earlier this week. And honestly, I think it's one of the most important ones that we're going to be facing.
Yeah, well, if Harris loses, I think the progressives, from the left are really going to do their best to pull Democrats left over the next 2 years before the midterms. That's not our base case, but I do think that that's a pretty clear path forward for Democrats. It's hard to get much more centrist than the current Democratic machinery, regardless of what you think about Kamala Harris. If Trump loses, we actually have a little bit of an internal debate at Signum. I think the upside, for all of us, and particularly for the Republican Party, is they're able to move on from Trump, amicable break pretty quickly, and they allow the next generation to move up. I think it's going to be a lot harder, a lot easier said than done. Donald Trump if he loses, he's going to have a lot of legal challenges to face. It's a lot easier to do that as the head of a major party than it is sort of cast to the side. So I think he's going to hold on to power for longer and more vigorously than maybe some other Republicans would like.
Can you think of a single person that's in a position right now to step in and pick up the pieces if he stepped aside?
It would be really challenging because it needs to be someone that has the MAGA bona fides, but also those people that are trending well in the Republican Party are a little bit more centrist. Look at Nikki Haley, but she was brushed aside, and she's persona non grata for MAGA camp.
Rob, it's good to see you.
Great to see you.
Rob Casey there of Signum Global Advisors. If you are just joining us, equity futures right now on the S&P up by 0.2%. Though as you will hear repeatedly throughout today, into the afternoon and into the evening and night, this could be a very, very long week ahead of us.
Are you trying to telegraph your day ahead, John? Is that basically what you're feeling? I mean, honestly, we've heard this from everybody. This is what everybody's kind of hunkering down to try.
I'm suggesting this might take a while. Is it going to be 2016? I was on air that night. It was about 2:30 Eastern time. That's when we finally wrapped this all up. And you kind of knew as we were drifting through the night which direction it was going. 2016, I know exactly where I was. I was walking through Hyde Park with this one, Anne Marie. And then we found out about 4 p.m. local time in the UK.
So
on a Saturday.
Write in what your takeout orders are going to be as everyone stays up all night. I'm curious to know what the snacks of choice are. We can compare notes.
We'll see how long it takes. Up next on the programme, don't forget, there's a Fed decision later this week. A call from Citigroup just around the corner. equities with a small bounce, up 0.25% on the S&P 500. On the Nasdaq 100, we're up by 0.4% after declining just a little bit yesterday. For the bigger moves, they're in the bond market. So last week, the 2-year and 10-year up by double digits, then yesterday down by double digits. You keeping up with all of this? We're up by 2 this morning. 430.90 on a US 10-year. On a 2-year, 417.23. Just a feeling that the polls started to rebalance towards Harris over the weekend, which injected this bid into the bond market Monday morning.
Yeah, but as you pointed out, that bid is 10 basis points, 15 basis points at one point. And basically, you're talking about the bond market at the epicenter of volatility for this election cycle. That, to me, I think is a takeaway from what you're saying. I do want to just make a note. Yesterday, we had a 3-year auction. Normally, 3-year auctions are pretty easy. They typically are digested pretty well. This one, not so much. And today we have a 10-year auction and tomorrow a 30-year auction at a time where there is this much skittishness around the U.S. bond market. I am watching that very closely.
Yeah, it's an interesting time to drop a 30-year auction tomorrow afternoon. We'll see what kind of backdrop we've got for that. Let's look at the FX market together. So the euro stronger, 109. The dollar weaker over the last 24 hours. The bigger move in dollar mex. Mexican peso starting this week with a strong rally. That's the trade story, front and center to start the week.
Basically, the argument here is if Donald Trump gets into office, and even more so if there's a red sweep, there could be some substantial tariffs placed on Mexico, which would be dollar strength, and that would be peso weakness. And that's the reason why that's become one of the proxies. I think it's interesting to see where traders have honed in on what the proxies are. And sometimes you can tell more about that than you could tell even about who's going to win or what the policies are.
Yeah, because that's not about a sweep. That's about a presidency.
Correct.
That's about tariffs. The rest of it, if you're thinking about yield differentials and things like that, that's about the sweep. That's about what happens with tax cuts and what happens to the budget in America. So you're taking a temperature in different ways across foreign exchange, which is something to keep an eye on through this week.
Yeah, and especially at a time where essentially tonight, when everybody is taking snacks, I still haven't gotten word from other people about what their snacks are going to be tonight. Celsius is not a snack, but I do think that going forward, there is a real question about, what people are going to be reading into with the polls that come out, and how they trade, and what these proxies say, and how narratives get created. And that, I think, is going to be one of the most interesting aspects.
Well, if you remember in 2020, you first had all the individuals who voted that day, and it looked like a red sweep across the country. But then you had to say, settle down. They are still counting votes. And it was Democrats who decided to do mail-in voting, mail-in ballots. And in a place like Pennsylvania, you cannot start counting those. Even if you got them 2 weeks prior, you cannot start counting them until the day of. So that is why everyone needs to take a deep breath. And it could take a few days, maybe even a week.
Maybe even longer than that. We'll see. Equity futures right now in the S&P up 0.2%. Under surveillance this morning, election day in America. Polls showing Kamala Harris and Donald Trump locked in a tight race across several key swing states that will decide the next president. The polls are incredibly tight, and everyone is conditioned by, I think, 2 very, very unique, significant election cycles. The presidency in 2016 and the midterms of 2022. Because one is pre and post a very important decision that took place in this country.
Well, we spoke to Speaker McCarthy recently, and he was basically, his vibe was that this was going to be red across the board. And then I said, well, yeah, but you said there was going to be a red wave in 2022. And he said, well, yeah, maybe not exactly. We need to look at historically Donald Trump. He's won one election, 2016. Then there was the 2018, they lost the House by some 41 seats Democrats were able to pick up. 2020. This is when he lost, again, when he ran for president, and they also were able to flip the Senate, the Democrats. And now he's up again in 2024. And are voters going to give him another shot, even though we've seen a long list of him losing elections? Or are they going to say, we want something new in terms of individual, because she is an incumbent?
What I think is fascinating is that I remember 2 months ago, people thought that this was going to be a contested election, and you saw that in the options for the S&P 500. Completely faded. People are like, we're going to find out by tomorrow. It's fine. And basically, that's the tone of everyone who we've gotten around this table. Basically, the market will rally once we have an answer, and then we can all move on. And I don't know how much this is hope, and I don't know how much this is actually based on reality, but none of us really seem to have an edge.
Well, one thing I can say is we all share that hope.
Indeed.
I hope the optimists amongst us are correct. Let's turn to this one. Boeing. Workers voting to accept a new labour contract, ending a 53-day strike that's crippled production of the plane manufacturer. The new deal, including a 38% wage increase over 4 years and enhanced retirement contributions. That stock is up by 1.9%. There was some doubt yesterday. given that this has failed a few times already, that this would actually happen.
Including by Michael O'Leary of Ryanair, who came on here and said he thinks that why not hold out for 40% gains? I mean, why stop there? What you heard from the head of the union was this was a defining moment. This is a victory. We stood strong. We stood tall. We won. Here is the question. What are they winning back to? What are they going to walk into at a time where this is a company that needs to reshape its business model and understand how quickly it can ramp up production to meet with Ryanair's demands that it seemed to be making yesterday?
Absolutely. There's a transition that is definitely happening at Boeing, but immediately these workers are going to get paid. They're getting, a $12,000 signing bonus. They're getting their health care benefits back. A sigh of relief at the White House. President Biden yesterday putting out a statement congratulating the support of his economic team, including Acting Labor Secretary Julie Su, NEC Director Lael Brainerd, and then goes in for this. Collective bargaining works. I wonder if slightly there's a little bit of an edge ahead of the election. Union Joe making a last statement about collective bargaining works. We're on the side of rank and file union members.
Michael O'Leary, those planes are going to Sweden, right?
Yeah.
And Italy.
Yeah, that's
not
right.
to the UK.
The ABBA Museum.
There we go.
Okay.
He was singing and dancing.
He
on
was.
a commercial break.
He was very excited.
It's quite an interview. Lots of feedback about that. Let's turn to the final story here. A Pennsylvania judge rejecting a request to block Elon Musk's $1 million voter giveaway. Musk had been giving away $1 million a day to people who signed a petition calling for free speech and the right to bear arms. Philadelphia's district attorney calling it an illegal lottery.
So Musk's lawyers saying this isn't a lottery, this is a job. They say it, quote, represents a salary to voters rather than illegal lottery payouts. That person then becomes a spokesperson, part of this PAC. So they're basically saying this is a job, it is not a lottery, and that person is getting a salary.
Do those people know that?
I think those people thought they were picked at random as part of a lottery, but
it's actually unclear. Actually, the lawyer said that this isn't necessarily random. And these might not have been randomly selected. Look, there are a lot of questions around this, but there's a sense.
But do the people know that they were not randomly selected?
It's a good question. We don't know. There's a lot of uncertainty here. Either way, it can continue with literally today as being the day.
Got to find one of those guys and interview them and see what they've done with the cash over the last week or so. I'm interested.
Tesla?
Possibly. Discount?
Yeah,
is that illegal too? Possibly. Yeah. There's one more key event coming up this week, the Fed rate decision. Economists widely expecting the Fed to cut rates by 25 basis points on Thursday. Veronica Clark of Citi is among them, adding, quote, the December rate cut decision will depend on labour market data and we expect a further softening to lead to a 50 basis point rate cut. Veronica joins us now for more. Veronica, good morning.
Good morning.
Torsten's Lock of Apollo on the programme earlier this morning with Danny and Manus saying that we'll get no cut in December. Maybe we hit pause. Why are we going 50?
Yeah, there does seem to be this, reflation kind of narrative in the last month or so in markets, but I think it's a little bit overdone at this point. On inflation alone, I think the Fed can be cutting. We did have a stronger September core PCE reading, but we saw ECI, Employment Cost Index last week. That's been slowing. Home prices that are still pretty soft. So I think they can be cutting on inflation alone. But I do think, we are seeing concerning signs in the labor market data. And this is a labor market that looks precarious at best, I think. And that would be what gets the Fed to go faster.
This Thursday, we might not know the outcome of election. I hope by the time we get to the middle of December, we do.
Yeah.
So we should have a better idea of what the policies are for 2025. Could that shape their decision in any way?
Yeah, I don't think yet. I think in some sense, we're expecting more, expansionary kind of policies, tax cuts, tariffs, maybe things that would raise price levels. But I think the Fed is going to be reacting to what we're seeing in current economic data, what the current conditions are, not projecting where we might be a year from now. If you did see some kind of inflationary impact from fiscal policies, they're going to wait to see that in the data before reacting.
There's a really interesting point underpinning that 50 basis point call of yours at a time where we're going to shift from who won the election to how much is the Fed going to cut rates again. I mean, basically, this has been sort of the parlor game in markets. There's a big question about how strong the economy is right now. And everyone who's come around this table says, actually, the economy is really strong heading into this election, and it's in a great position for anyone who wins this election. Right. You disagree. Why do you disagree?
Yeah, I mean, in some sense, yes, consumers are still spending. We've still seen some strong investment data, but it really comes down to that labor market data. Obviously, we had a report on Friday that was weaker than expected. Markets didn't really react to it at all. Maybe there are temporary strike hurricane issues in that payroll number. But there were things in that report unrelated to those temporary factors that looked a lot weaker. We did have the unemployment rate rising on an unrounded basis, at least. We see the highest share of permanent job loss yet this cycle. We got some pretty big downward revisions to payrolls in previous months. In August, private payrolls rose by just 37,000 jobs. So this is a labor market that is slowing. We see labor demand pulling back. People are not quitting. People feel worse about their employment prospects. And that's a pretty concerning sign for the Fed.
At the same time, some people say it's just stagnating. This is just a frozen market. It's just that people aren't getting laid off, but they're also not getting hired. But they're not feeling terrible. And we were talking to Neela Richardson of ADP, and she was saying people actually feel more loyal to their employers, which tends to happen when the labor market is doing better and they're not worried about losing their job. So what makes you think that it's going to break to the layoff cycle?
Yeah, I would say some of the consumer confidence data around the labor market has looked more concerning. That labor market differential in the Conference Board survey, that's come down pretty substantially. I think the soft landing explanation for what we're seeing is, yes, we have very low hiring, very low quit rates, still low layoffs. We were coming from a couple-year period of very tight labor markets, people moving jobs, so maybe this is the natural pullback of that. But it looks like more than that to us. If you did just see people pulling back on hiring, you wouldn't expect current workers to be working less, but hours worked have come down. There's more part-time employment. This does feel like employers looking to cut labor costs to us. And yes, you haven't seen the big increase in layoffs yet, but that's really the last step and the concerning step for the Fed.
When do you think that could happen?
Honestly, any time now. This is kind of the usual tipping point of these cycles. I think it's been an important dynamic that we've seen quit rates dropping pretty substantially in the last couple months. I think for a lot of the last year or so, employers have been cutting labor costs by not hiring, not replacing workers. But suddenly, if people are not quitting and you don't have open positions to not fill, that can get you to layoffs. We did see an increase in initial and continuing jobless claims the last month or so, and more than half of that was related to states not impacted by hurricanes, so it was not just temporary issues.
I want to ask you about politics because Elizabeth Warren yesterday, right on cue, the senator of Massachusetts, calling on Fed Chair Jay Powell to cut by 50 basis points. Is that at all possible this week?
This week, probably not. I think, of course, the Fed usually doesn't like to surprise us. We had a little bit of a divergence of that in September. I think this week it's very likely a 25. And I, in general, do believe that the Fed is not susceptible to political pressure.
I do wonder why Senator Warren's chosen to do this again. Why? Election week.
Well, she also put out a list of every time she's told the Fed to do so. So I just think this is more about her and less so about the election. She's looking through the election and only focused on Thursday.
Can we get a final word from you on the independence of the Federal Reserve and how things might change with a Trump win? What could things look like for months to come? Never mind letters from Senator Warren. How different might things be?
Yeah, I mean, I do at least, obviously for the next year, Powell is still Fed chair. Obviously, President Trump's first term, we had the debate of whether, Powell would be removed or not. Legally, can you do that? We're assuming that, Powell will stay, finish out his term until early 2026. And I do, in general, believe that the Fed is independent.
No open letters from the presidency telling Jay what to do?
Well, I don't know letters, but I think more tweets. If he was to win again, I think it would be truths.
Yeah.
But that's going to be the vibe, a lot of jawboning.
Veronica, good to see you. Veronica
too.
Clark of Citi, looking for a 50 basis point reduction of the Federal Reserve in December and 25 this week on Thursday. With an update on stories elsewhere this morning with your Bloomberg Brief, let's cross over to Danny Berger. Hey, Danny.
Hey, John. Hurricane season continues on. Tropical storm Rafael has formed in the Caribbean. It's the Atlantic's 17th storm of this season. According to the U.S. National Hurricane Center, it has top winds of 45 miles per hour. Hurricane warnings and watches have been posted for the Cayman Islands and Cuba, and a tropical storm for the Florida Keys. Employees of the New York Times Tech Guild have gone on strike. The guild represents over 600 software developers and other back-end specialists who oversee digital aspects at the Times. The employees claim that they gave the Times months of notice before deciding to go on strike, but failed to reach an agreement on a contract. OpenAI has begun prelim discussions with regulators to transform its nonprofit structure into a for-profit business. According to two people familiar with the matter, OpenAI is in early talks with the California Attorney General's office over the process to change its corporate structure. Becoming for-profit would make it more attractive to investors, but could open the door to ethical questions on its original do-gooder public mission. And that's your brief. John.
Danny, thank you. Appreciate it. More from Danny in 30 minutes' time. Up next on the program, repricing election bets.
If you get a Trump victory, I think the odds of a bear steepener, that's pretty likely. But under a Harris administration, it's more likely to be a bull steepening.
What did Lisa say last week? Choose your own adventure. Do just that. From New York, this is Bloomberg. Live from a beautiful New York City this morning. Good morning. Guess what happens tomorrow morning? The sun rises again, and the morning after that, and the morning after that. Is that enough for you?
Well, yeah, I mean, I think it's great. I think we don't get to see it. We get to see it through the screen. And I think it does rain later in the week. But
Connecticut, New Jersey, New York, the polls are open, and you get to go to the polls with this beautiful sunrise.
It's election day in America. Equity futures on the S&P 500 firmer here by 0.25%. Bond yields higher by 2 or 3 basis points. The 10-year 4.31. Under surveillance this morning, repricing election bets.
If you get a Trump victory, I think the odds of a bear steepener, yields rising on the back end more than on the front end, I think that's pretty likely. But under a Harris administration, it's more likely to be a bull steepening. Either way, you're not doing as well out the long end. On a Trump victory, I think initially, if there's some safe haven flows, that would benefit the dollar, but only on a short-term basis.
So here's the latest. The dollar weaker as investors reprice bets on a second Trump presidency. Juckes of Soc Gen writing, a Trump clean sweep and a Harris win without a clean sweep remains the two most likely outcomes in our view. And equally likely, these are the most bullish and most bearish outcomes for the dollar, respectively. Kit joins us now for more. So, Kit, I've known you long enough to say unhelpful. What are you telling people to do?
I was thinking about it. It's a bit like the sort of the Brexit story in terms of whether we're going to have a hard Brexit or not back in 2020, when you really have to be careful about where to go. I think we have to be sort of conscious of the fact that at the moment, what we're doing is seeing bets get taken off. The market got excited about the possibility of a Trump victory, and the Treasury market sold off. The dollar rallied. We're giving up back some of that. I think in terms of the places where the market has skew in its pricing, I think if Trump doesn't win, or if by some chance he didn't get a clean sweep, because that's very important as well, then currencies like the Australian dollar, where they decided not to cut rates this morning, and where they don't look like cutting rates this year, that looks like an undervalued currency on any scenario other than kind of the most aggressive Trumpian one in terms of fiscal expansion in the United States, tariffs on China, and maybe even only a modest Chinese policy response to that. So the Australian dollar might be the outlier. But if you said that the yen is going to follow where bond yields are going to go almost regardless, then frankly, Trump wins with a clean sweep, dollar yen might be at 160, and Trump doesn't. Harris wins without a clean sweep, dollar yen might be breaking towards 140. So it's just a massive gamble that's very hard for people to cope with, and they have to hold tight until we see if we're going to get a result tomorrow morning.
But Kit, long term, if it is a Trump win, or potentially this clean sweep scenario with Congress going red as well, Trump has talked about the fact that he wants a weaker dollar. How do you be able to measure both of these basically conflicting results?
Look, the dollar's strong because the United States has had exceptional fiscal policy, because the U.S. has issued a lot of bonds and bond yields have been higher. And the strength of the fiscal stance in the U.S. compared to everything we've done in Europe is that it has helped the economy outgrow the rest of the world spectacularly. Trump wants more growth. He wants to put tariffs in place to get more people into manufacturing jobs in the United States. At a starting point of pretty low unemployment already. He can't have that much cake and eat it in terms of an economy that's going to be even stronger, with fiscal policy continuing to be accommodative, and have a weak currency, because in the end, the biggest threat to Trump is going to be inflation on what we've heard so far. So he'd have to change some of his policies if he wanted a weaker dollar. We'll see how it plays out. But you get the currency your policies give you, not the currencies you wanted.
Kit, when you look at why the financial markets changed, was it because of the polling out of Iowa, or is it because they're basically a little bit nervous that they got too over their skis when it comes to the Trump trade?
I think that if you looked at the dollar index and you plotted it against the betting odds from real clear politics and how they were going in favor of Trump, they moved very closely together. So the betting odds have moved back in line with the opinion polls in the last week, less than a week, really. And Iowa played a part of that. And I think that's certainly seen people taking not just bets off perhaps in the betting space, but taking some of those trades off. And so when we look today as if we're closer to a market that genuinely doesn't know what's going to happen. And maybe that's the right place for it to be.
Which raises this question, Kit, how violent could the reaction be in markets after we get some sort of result, given that everyone's going to be racing to it, no one really had an edge? Yesterday, Mike Wilson of Morgan Stanley was talking about how he sees a clearing event coming after we get the results from this, and the clearing event could last a month. How violent of a clearing event could it be if we get a decisive result one way or another in the base cases that you laid out?
Look, if you just tracked from the polls, so from Harris entering the polls and then Trump sort of coming back, and then where we are now, we're sort of 107, 101 in the dollar index. I imagine that a sudden sort of, when you're not sure, you get through those levels. That seems to me like the most likely outcome. So it's pretty violent. Again, if I look at dollar yen in terms of that, the violence of a dollar yen move depends on how much treasury yields can move. But we've had a big sell-off at the long end of the treasury market on concerns about more accommodative fiscal policy, increased bond supply, and some inflation worries. If you had a scenario where those melt away, the treasury market's pretty bearish at the moment in terms of sentiment. So a snapback rally there, what that could do to the yen is very striking. So right the way across the piece, we're not, I don't think we can avoid having a pretty violent reaction. And history says, we sometimes overshoot and then come back and settle down and decide that we'll have a look, because there'll be so many more questions. I mean, we have to sort of put in sort of minor adjustments in the sense of, whether someone has a clean sweep or not is very important. How it looks, and then we're going to work out whether either president can get what they want through Congress, irrespective of what that looks like. So that there'll be lots more questions, but I think the initial reaction is likely to be pretty big, really, just because we're caught where we are.
Kit, are you watching the election from Mexico City?
I am not watching the election from Mexico City. No, that would be too exciting. But yes, you look at the impact on the yen, on the Australian dollar, on the Mexican peso, on all of Latin America, really. In fact, for once, Europe is likely to be less affected, I think, than the rest of the world. I mean, that doesn't mean it doesn't have an impact here, but the big story is Asia and Latin America.
Interesting. Kit, appreciate it, sir. Kit Juckes of Soc Gen. The global capitals will be watching Beijing and Mexico City.
Oh, big time. I mean, with Mexico City, there's a question of if Trump gets into office, unilaterally putting tariffs on in Beijing. Not only is there a real question around what policies will be, but they have their own question about how much stimulus to pump into the economy in their meeting that ends on Friday, where they're basically holding a watch party overnight to understand what the parameters are that they're going to be working with.
And potentially they may need to extend that meeting because we might not know the results. But Kit make a point there about the fact that even if you had a clean sweep, you might not get everything you want. And I think back to Biden the first 2 years. They had the Senate, they had the House, and they still were unable to close the carried interest loophole that they've all promised that they would do.
Things aren't straightforward in Washington, D.C. Up next on the programme, Sarah Hunt of Alpine, Saxon & Woods, Terry Haines of Pangaea Policy, Kelsey Berro of JPMorgan Asset Management, and we'll speak to Scott Bessent of Key Square Group from New York. Good morning.
Stakes are high this week for three reasons, and that's the Fed earnings and the election.
Trump presidency is probably more pro-growth. Harris would be probably a little less growth.
You're going to end up with some volatility regardless of what happens.
We are neck and neck right now, and we're not going to know until the votes are finally counted.
Even when you solve for Congress and you solve for the president, you've got to solve for a third issue, which is how much of what is being said will actually be implemented.
This is Bloomberg Surveillance with Jonathan Berro, Lisa Abramowitz, and Anne-Marie Hordern.
It's like gearing up for a marathon, but you don't know how far you've got to run. Could be a day, could be two, could be a week.
Keep going.
It's election day in America. Equity futures on the S&P 500 up by 0.2% on the S&P. On the Nasdaq 100, futures elevated by 1/3%. In the bond market, yields bleeding just a little bit higher across the curve on a 2-year, 10-year and 30-year. Yields are up 2 basis points on 10s, 430.70. Back in 2012 when Obama won, it was close to midnight. In 2016 when Donald Trump won, it was about 2:30 overnight. And then it took until Saturday of the same week to find out that Biden won 4 years later. How long is it going to take this time?
If the polls are correct, and that's a very big if, this could be the closest election, the closest race ever in history. The problem is everyone is saying it is implausible. It is statistically absolutely anomalous to see all of these polls that put these two candidates at a dead heat in all of the 7 swing states. So a lot of people are wondering, what are we all getting wrong?
The Harris camp is telling you to hunker down, basically. Jen O'Malley Dillon yesterday saying they'll get near complete results from Georgia, North Carolina, and Michigan, as well as partial results from Pennsylvania and Wisconsin, Arizona. But she said that, quote, ballots will continue to be counted for many days. Maricopa County officials are telling you 10 to 13. There's no longer the days of waking up, going to your front stoop, and getting a newspaper with the President of the United States, President-elect, on the front page. This is going to take days, and everyone just needs to take a deep breath.
It could be weeks. Here's my deep breath. Equity futures on the S&P 500 up by 0.2%. Coming up, Sarah Hunt of Alpine Saxon Woods with markets on hold as Americans head to the polls. Terry Haines of Pangaea Policy calling for a 60% chance of a Harris victory. And we'll catch up with the Trump economic advisor, Scott Bessent, on why the former president would not weaken the US dollar. We begin this hour with stocks and the dollar holding steady as election day in America gets underway. Traders taking a cautious approach with the outcome uncertain and possibly days away. Sarah Hunt of Alpine Saxon Woods saying we can see a path to a reasonably good end to the year if there are no protracted political fights. But we also think caution going into 2025 is warranted. Sarah joins us now for more. Sarah, good morning.
Good morning.
Do you believe there will be some protracted political fights?
I hope not. But it's a difficult thing because if it is as close as the polls are showing, then it probably will be. If it isn't and you start to see a surprise one way or the other, like the Iowa surprise or another surprise where it starts to be clearer that it's not as tight, then I think you won't get as much of a protracted fight. But we'll just have to see. I don't think we have an answer yet.
Is caution warranted in 2025 regardless of the outcome in the next 24 hours?
I think so. I mean, I know that there's a lot of optimism on it's a reasonably good economy, it's a reasonably good earnings, everybody's doing okay. But we have this fiscal, elephant in the room, literally, that our deficits are widening no matter what we do and no matter who's talking about it. No one's talking about doing anything about that. Does that mean that we end up with higher bond yields than we would have normally? Does that mean that we get some sort of a change there? I think that is something that as the cost of the debt gets higher and higher and becomes a bigger part of the budget has to be addressed ultimately. And right now, no one's really talking about it.
Even in the bond market, they basically say it does have to get addressed. Maybe that's a 2027 story. And that's the reason why there hasn't been this true upheaval in bond vigilantes coming to the fore. I do wonder, though, how much this just creates a problem for the bond market, not necessarily for the stock market. Because that's basically been the theory that right now, bonds aren't a hedge to stocks as long as the economy is doing well. So why even hedge and just go into equities, which are levered to a stronger growth, stronger inflation economy?
Well, the problem becomes if that stronger economy starts to get hindered by the fact that you now have a spending problem, right? So it's really about how does that translate through? And at the moment, that's not yet clear, but I do think it's a concern. And I think that you've seen the equity markets wobble every time the bond market started to get wobbly. So I think that there is a correlation there, even though those correlations have not held up historically the way that they used to post the great financial crisis when we had zero interest rates for so long. I just think that when people start getting nervous about one thing, it translates into other things, and whether or not that nervousness is necessary and or is true, it almost doesn't matter.
So this is counter consensus. We were talking to Julian Emanuel, and he was representing the view that typically markets continue on the path that they've been on, which has been up. If you believe this, how much are you de-risking ahead of this election, given that you see things very differently?
I think it's really more about just making sure that what you have is something that you think is a really good place to be. Where you are is a good place to be for the next couple of years. And that tends to be more thematic, and it also tends to be better balance sheets, higher quality, a lot of those things that don't always work as well when there's a lot of enthusiasm in markets, because some of the less quality stuff tends to move higher when people get very excited. But I think to the extent that what you really want to see is a company that's able to sustain itself in any economic environment, that's more the direction that we're looking in than it is to be worried so much that there's going to be a major change. It's just more on the edges. I think there's likely to be more volatility. And I think that where multiples are right now, it's hard to say why they should just continue to go higher to the sky, right? Trees don't grow to the sky.
Sarah, when it comes to the rising debt load, this morning in the Financial Times, Mohamed El-Erian quotes JFK. And basically, in times of sunshine, it's time to fix the roof, not be digging new holes. Which campaign potentially is going to dig bigger holes?
I think they've both promised to keep digging, right? You're in a hole, stop digging. But I haven't heard much rhetoric on either side that says this is something that really needs to be addressed. And the fact that we are in a growth economy and we are seeing these deficits and they're growing is not a good sign. Because if you do get into a real economic slowdown, that push to have fiscal policy come in and help becomes much more difficult when you've already got deficits that are quite high. No one has worried about them for a while. And there's been a lot of discussion about, well, why worry? If it hasn't been a problem yet, why is it going to be a problem? It's fine until it isn't. And I don't know where that line is, but at some point, I think it does become a problem.
Well, finding that line potentially next year, you have all of these fiscal questions. You have the Trump-era tax cuts ending. There's this idea of there's going to be another protracted, potentially debt ceiling fight. Could 2025 be the time when the bond market pushes back and the deficit people, Lisa, are correct?
Well, it's going to happen at some point. But all the things that we thought were going to happen in some sort of timely manner got pushed to the right. I would have thought that inflation was coming when we started this whole experiment in 2008, 2009 of having zero interest rates forever and just throwing money at every problem. But it took years for inflation to catch up. And that was really partially because there was a pandemic that messed up the supply chain. So what we think of as these relationships from a historical standpoint have not held over the past 15 years. So it's difficult to parse how they're going to hold going forward. But you think about the fact that that port strike really got pushed out into the future, too. There's a number of things that could come up in 2025. And it's more that, you have a great year in 2024. Whatever is happening on the political front, everyone has a little bit of enthusiasm for that. And then you go into 2025 and people start looking at their outlooks and going, there's some things here that we could be concerned about. So it's really more about that. I'm not looking for some giant problem. I'm just saying that we've had a great couple of years in the market, and now we're looking at high multiples and some real uncertainty.
We've said it a million times on this program, truly flying blind into 2025. It's a pretty unique moment to have $4 trillion of tax cuts expiring next year, which is why the outcome of the Senate later on this evening is that much more important.
Especially given the fact that a lot of people just expect those to continue. And if they aren't, how much does that actually matter for the equity market more than for the bond market, since spending is going to expand either way? But you are correct. There are all of these intricacies that I expect to be the real distinguishing features between the different incremental moves that we see later tonight, which you'll be tracking all night long.
Thanks for that.
When it comes to the tax cuts, though, do you see any of these candidates wanting to raise taxes on those individuals making, say, less than $400,000, $500,000? No. Then it's the corporate tax rate. The gap is so wide. We're talking about 28% on one side, as low as 15% on another side, with conditions that no one has ever actually been transparent about.
Scott Bessent coming up a little bit later. We'll try and get some clarity on that point. Sarah, it's good to see you.
Thank you.
Good to catch up. Sarah Hunt of Alpine, Saxon Woods. Equity futures right now on the S&P up by 0.2% with an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Despite rising debt, Aramco is keeping its $31 billion dividend. The company, which is majority owned by the Saudi state, is already paying out more than it's earning. Saudi's ambitious economic transformation plans, have widened the government's budget deficit, pushing Aramco into a net debt position for the first time in 2 years. The outlook for oil has also darkened with concerns over demand, but that dividend, it is seen as key for the government's finances. Shares of Nintendo, those are dropping lower by nearly 4% in the Japanese trade. The gaming giant slashed its full-year outlook, reported a fifth straight quarter of declining profits. Demand still lags for the aging Switch consoles, but rather than upgrading it, Nintendo has shifted focus to other products and ventures, including a museum, smartphone apps, and Hollywood films. The Kansas City Chiefs' perfect season continues after beating the Bucs in overtime last night. The Chiefs shook off a tense moment in the fourth quarter when QB Pat Mahomes had to be helped to his feet after injuring his left ankle. He was able to stay in the game, though, and throw another touchdown pass to put the Chiefs ahead. Mahomes orchestrated a 10-play drive in overtime, capped off by touchdown run from Kareem Hunt to seal the win for Kansas City. They're looking to secure the first three-peat in Super Bowl history. And that's your Bloomberg Brief. John.
Danny, thank you. More from Danny in about 30 minutes. Up next on the program, closing arguments.
Look, the ball's in our hand. All we have to do is get out the vote tomorrow. You get out the vote, they can't do anything about it. We win.
If you give me a chance to fight on your behalf as president, there is nothing in the world that will stand in my way.
That conversation up next. This is Bloomberg. Equity futures on the S&P 500 up by 0.2%. In the bond market, yields aggressively lower to kick off a trading week. They bounced this morning up by 3 to 431. Under surveillance this morning, closing arguments.
Look, the ball's in our hand. All we have to do is get out the vote tomorrow. You get out the vote, they can't do anything about it. We win. We're the party of common sense.
If you give me a chance to fight on your behalf as president, there is nothing in the world that will stand in my way. I will spend every day on your behalf working on my to-do list.
So here's the latest. Harris and Trump delivering their final campaign rallies in the battleground states of Pennsylvania and Michigan. Almost $4 out of every 5 spent for the presidential election has gone to key swing states, with an astonishing $1.2 billion being spent on Pennsylvania alone, marking the first time a single state has seen more than $1 billion in ads. Joining us now is Bloomberg's David Gura from Philadelphia, Romaine Bostick from Detroit. David, first to you. You've been there a couple of days. How overwhelming has it been to be on the other end of these ad campaigns that we've seen build up over the last few months?
Look, I spent several hours yesterday walking around and talking to people here, and to a T, each one said they've been inundated with advertisements and outreach, and the fatigue is real. Yes, they understand the gravity and importance of this election, but they recognize they've been targeted by a lot of money and ads and outreach, and they are ready for this election to be over with. I spent last night on the promenade behind me here, Ben Franklin Parkway, in Philadelphia, which leads to the Philadelphia Art Museum. That's where Kamala Harris had her final rally, made her closing argument. It was a version of the stump speech that she's given now for many weeks, one that is heavy on optimism, didn't mention her opponent by name, and is sort of imploring those who are in the audience here to do a couple of things. 1, show up and vote themselves. 2, to have conversations with friends and loved ones about their plans to get to the polls and vote here today. They've been open for about 15 minutes. They'll be open here until 8 o'clock tonight. I said everyone's aware of how much money has been spent targeting them. They're also aware just of how critical this state is for both of these political parties, these 19 electoral college votes. Another speaker last night was Senator Bob Casey, the incumbent Democrat. He was on stage here. He is fighting for his seat, fighting for a 4th term in the U.S. Senate. He asking for the Democrats gathered there last night for their vote as well, as David McCormick campaigned in this state, who's running against him, of course, the Republican who spent some time as the chief executive at Bridgewater. A couple of contrasts I just want to note in that speech that we heard last night. Yes, the lightness, the optimism from Kamala Harris versus the darkness, the dark rhetoric that we heard from Donald Trump as he campaigned here in Pennsylvania, in North Carolina, in Grand Rapids, Michigan, where he closed things off last night at 2 o'clock in the morning. That's when he finished up his last speech and made his way down to Florida. Also just sort of the generational divide that we saw on display as well. Really an emphasis here in Philadelphia as we listen to Kamala Harris about how this is a big tent and she wants all people to be a part of it. Again, reiterating a message that we've heard from her on this campaign trail. And the last thing I'll say here to all of you is a lot of reflection on how much this campaign has done in a very short period of time. Of course, it's been just about 3 months since the incumbent president decided he's not going to seek re-election. Kamala Harris, numerous surrogates last night just acknowledging the fact that this is an unprecedented move that we've seen during this election cycle, and the amount of momentum, the amount of sort of work they had to do to introduce this vice president to a wider electorate was a monumental task, and they're feeling pretty good about it. Cautiously optimistic is what I've heard from a lot of party officials, as I've called them, throughout the state. Again, those polls are open. People are returning their mail-in ballots if they didn't get them in the USPS or to those voting stations in time going up to Election Day. But again, the emphasis here is the finish line is in sight, but they've got to run through it. That's what we're hearing from both of these candidates here in Pennsylvania today.
It certainly has been an unprecedented election cycle. Romaine, there's been a lot of criticism about the incumbent administration when it comes to their handling of the war in Gaza. Rank and file voters upset about electric vehicles being made in places like Detroit. You're on the ground there. What are you hearing as the most salient issue going to this election from individuals in Michigan?
Two words: foreign policy, believe it or not the economy, not reproductive rights, not immigration. When you go around the communities where I'm at here in Northwest Detroit, it is all about tariffs. It is all about manufacturing jobs lost. If you go just a little bit west to me, to the Muslim and Arab American enclaves of Dearborn Heights, Hamtramck, these are all communities that have voted by a wide margin for the Democratic Party for the last 30 to 40 years. That is not likely to happen in 2024. A major split, a major rift with regards to the Biden and Harris administration's handling of the war in Gaza. A protest vote, if you will. It's not going to Donald Trump. If you get this here, Kamala Harris amongst the Muslim and Arab American population, polling at less than 20%. Donald Trump, though, only polling at about 30%. The lion's share of those votes are apparently going to go to third-party candidate Jill Stein, a sign of protest amongst a lot of people here who want to send a message to both candidates. Right now, the polling center behind me here in Northwest Detroit, a working-class neighborhood, just opened just about 15 minutes ago. I did have a chance to catch up with election officials late last night who are expecting a pretty orderly process here. After all, compared to what we saw back in 2020 with the pandemic-induced constraints of that election, all the absentee ballots that came in late in that day, they're not expecting that this time around. As of last night, more than 47% of the folks here in the state of Michigan had already cast their ballots either through absentee ballots or early voting.
Romaine, just quickly, I'm curious about whether the view is that Jill Stein could take away a sizable portion of votes that otherwise would go to Kamala Harris. Is that what you're hearing from campaign officials?
I'm actually hearing the opposite, that a lot of those votes probably would have gone to Trump. Keep in mind, when I say foreign policy is a big issue here, Lisa, it's not only what's going on with regards to the situation in Gaza. Michigan is home to about 600,000 Polish Americans, one of the biggest concentrations of Polish Americans in the country. And they are also voting on a big single issue, and that is the war in Ukraine and what they see as Vladimir Putin's broadening power. I did speak with the head of the Polish American Association here, and she said that the voters there are probably just as split as a lot of Arab American voters there. Also a huge Jewish population here, also voting on the issue of Israel as well. Those three communities here could actually be the big determinant of whether Harris or Trump wins the presidency here in the state of Michigan.
World-class reporting from the Bloomberg team. Romaine Bostick, David Gura. Gentlemen, thank you. Terry Haines of Pangaea Policy joins us now for more. Terry, let's get to your calls. You've said Harris has the edge. You said 70% likely we get a split government. Democrats take the House, Republicans take the Senate. Small majorities. You've been quite consistent about this over the last few months. What underpins that view, Terry?
The consistency comes from the simple fact that the polls have been awfully static, John. I mean, it's not a lot more than that. My Harris call is based, frankly, just on, you've got, in a tied race, you have to look at the intangibles. And Harris's organization, voter enthusiasm, and message discipline that combines social issue focus with Trump loathing, I think barely beats a Trump campaign that has demonstrated hard voter ceiling, focuses on a tiny sliver of swing state voters. There's a split Republican Party with at least 20% who don't want Trump and are susceptible to moving over. And there's a lack of appeal in the Trump campaign to centrist undecideds. I think that all those things combine to give a small nod to Harris.
So, Terry, what did you make of the Iowa poll? Is this basically what you've been trying to explain the last few months, that she is correct, that the polling right now is underestimating some of potentially shy Harris voters?
I think Ann Selzer is a unicorn that always needs to be taken seriously. Ann's the first person to say, and did say, she thought it was a shock poll, and seems to be an outlier. That doesn't make it any less true. The undercard on that poll, by the way, is interesting, which is there are four seats, House seats in Iowa, all Republican. Selzer's poll has two of them being lost to Democrats, and the third the Democrat is within 3 points. So you got that. But what Ann shows in that poll is is the same thing that's been shown all year. You've got women that are hugely concerned about social issues, number one, and number two, you've got that hard Trump ceiling and Trump loathing going on. Ann had back in January that there were 40% of Republican primary voters who said that they weren't going to vote for Trump in the general, and that was the first piece of evidence to me that led to the Republican Party split that I think has been pretty clearly demonstrated.
So tonight when the polls close, when it comes to Pennsylvania, I was looking at Bucks and Erie County, but you're looking at Washington County. That's your bellwether. Why?
Very simply, Washington County has it all. Washington County has, in the Pittsburgh region, Washington County has the house prices, the highest house prices in the entire Pittsburgh region, in an area that hugs Allegheny County. Called Peters Township. But you literally cross a creek from Peters Township into Nottingham Township, a town called Finleyville, and the house prices drop by half or more, as does the income, and it gets poorer and poorer and poorer the farther south that you move. So if you want to see whether the independent women, they're pretty well off, come out in droves for Harris, that's a place to look. If you want to see if Trump can goose a lot of people who normally don't vote and bring them out to the polls to cancel out those people in the northern half of the county, you'll see it there. You will see the entire race in Pennsylvania play out in Washington County based on which is stronger.
How will the early voting and the fact that about half of the people who voted in the previous election have voted so far heading into this election day that really is election season, how does that change the nature of how we get results trickling out?
It depends on the state. In Pennsylvania, they don't start counting, I understand, until the early vote until Election Day itself. So that's a large factor in frankly, the stringing out of the election results that you all were talking about before. But largely it depends on the state. But beware anybody trying to read anything into this. Just because there's a party registration shift that exists in Pennsylvania towards Republicans as much as anything else, that doesn't mean those people are all voting for one candidate or the other. And, as Romaine just pointed out, too, you got a situation where just because there's registration advantages in one place or another, there's protest votes, special issues, all kinds of things.
Hey, Terry, we'll see you later this evening, sir. Terry Haines of Pangaea Policy. Looking forward to it, Terry. Thank you. Big takeaway from the conversation we just had. Romaine Bostic, Detroit, Michigan.
Yeah.
Not about the economy. It's about foreign policy.
And each individual group and how that is changing their decision to vote, who to vote for, whether to show up, and just how these people have been really catered to in that, what was it, $700 million of advertising that's been put in there by
Because
public.
why? In 2016, Hillary Clinton lost Michigan by 10,704 votes. If all of those voters that voted for Jill Stein decided to go for Hillary Clinton, she would have won the state.
Super small margins. That's what we're talking about. Super razor-thin margins, potentially going into this one. Coming up on the programme, Kelsey Berro of JPMorgan Asset Management as investors brace for election volatility. Equity futures right now up 0.1%. Bond yields bleeding just a little bit higher. From New York, this is Bloomberg. Here's a snapshot of things this morning. Good morning to you and welcome to the programme. Equity futures on the S&P up by 0.1%. On the Nasdaq 100 up by 0.2%. 2 hours away from the opening bell with your morning movers. Here's Manus Cranny. Hey, Manus.
Jonathan, a very good morning to you. There's an audible sigh of relief from Kelly Ortberg as 59% of the workers have agreed to a pay deal. So this closes off a 53-day strike. Now, this company is making 4 planes a month. That is 1 a week at the moment. So this is all about getting started up again. Can they get back to the low 20s on the 737 MAX? You have Michael O'Leary in the studio yesterday talking about the very holdback from Boeing is what's restraining his growth numbers. 38 is the magic number. That's on the 737 That's the maximum that they can produce. But this company's still going to lose money this year and the first half of next year. But it's relief at the moment. By the way, those workers go from 76,000 to 119,000, and the deal is going to cost Boeing about $1 to $2 billion. Palantir bid up this morning. Wow. I mean, Peter Thiel must be happy this morning. This is, in their words, unwavering demand for AI. Just think of the kind of companies. This is a huge government contract supplier delivering AI. Defense spending is the highest in 4 years with this company. Government contracts growth up 40% in the third quarter. And of course, they were included in the S&P in September time. So happy days for Palantir on the AI overlay on everything to do with government, defense, and any other company. Let's round it off with Wynn Resort. Yes, I love the line that you used this morning, which was, Marriott might have a problem with the election in terms of people booking rooms, but when it comes to big betting in Las Vegas and Macau, I think this is a manifestation of China, the amount of stimulus, the amount of underperformance in Macau relative to the rest of the market. Earnings disappointed on sales. Earnings per share 90 cents, down from 99 cents a year ago, and below the estimate. So you've got a little bit of pressure here. It's a different, I think, political story relative to Marriott. Jonathan, good
you're
morning.
right, Manus, and thank you for that. It's been a proxy to play stimulus hopes through. Wynn Resorts and other stocks like that.
So there is this bigger question. Is this actually just an excuse, or are there actually some people who are delaying their travels? It might be a little bit of both. I will just say, from a business travel perspective, because it's not a big holiday time, if you travel, what do you tell your clients right now? Are you going to do fundraising? Because what project are you going to be having absolute conviction about? And if you're going to tell your clients your incredible analysis about who's going to win, we don't know. I mean, that's essentially what's going on.
Manus mentioned it again, so let's go back to it. The CFO over at Marriott International, a key measure of hotel demand, declining in November by double that of past election cycles. Is it just the election, or is it something else?
We'll find out in weeks and months to come. That said, I was just looking at some other quotes from big executives around corporate America. This is one from the CEO of Snap-on. Welcome to the Mad Hatter's Tea Party. Nobody knows what's actually going to happen, so you can't even make a pronouncement. This from Etsy. The nonstop political noise is, quote, an incredibly distracting mindshare event. And even homebuilder D.R. Horton talking about how do you have conviction given some sort of big purchase if you don't know the path of the interest rates, nor nevertheless the backdrop for taxes and other big policy aspects.
A roll of dice if you want to lock in an interest rate right now. Under surveillance this morning, the US presidential race on a knife's edge. As Americans head to the polls today, voters across 7 swing states likely to decide the election outcome. Harris and Trump delivering their closing arguments in dueling rallies last night in Pennsylvania and Michigan.
It's going to be a long night. It's going to be a long few days. I keep coming back to the fact that these election officials in Arizona are saying it could be 10 to 13 days. Jonathan, you're going through what happened in 2016. We knew relatively quickly, at least overnight by the morning, you knew what direction of travel policy was going to be going in Washington, D.C. 2020, it wasn't like that because of all these mail-in ballots. This year, more than 80 million people have already voted. So this election day is off to a pretty good start. If you talk to either campaign, all they'll keep telling you is it's all about turnout, but turnout where? Is it rural Americans or is it people in the big cities?
We've seen a ton of scenario analysis, and we always say you can learn something from the information you receive and you can learn something else from how the market responds to that information. Sometimes you don't find out how the market's going to receive any particular makeup of government until the night, the day after, the week after, the month after. 2016 is a classic example of just that.
I was just going to say the poster child being 2016, because guess what? Everyone expected the market to tank, and it did the opposite. This time around, unclear how we're positioned, but people do think more of a Trump victory is baked into markets.
Let's get you some news elsewhere. Apple is exploring a push into smart glasses. Sources telling Bloomberg the company kicked off an internal study of products currently on the market last week. The research set to guide the company and what features it includes in its own glasses, as Meta makes a big effort here, right?
Yeah, but Meta's glasses are a little bit more expensive than the price point for this, which I believe is something like $299. It still is years away from it. I can just imagine my conversation with my kids later on when this becomes a thing. If I'm speaking to you, take off your glasses. I mean, honestly, how distracted are people going to be? Like, are they looking at you or are they reading their texts? I just am trying to envision this world and exactly how people exist in it.
Those Meta Ray-Ban glasses, though, have now hit the Oprah Winfrey three favorite things, holiday gift guide. She says she's going to be giving them to people. She loves how you can wear them. Traveling, it could translate a menu from a foreign language into English, take pictures as you're walking through a new city. So I feel like Apple's now catching up to potentially what Meta's been seeing. I remember Ed Ludlow was talking about this is going to be one of the most transformational pieces of tech.
He was moved by it.
He was moved by those
Genuinely,
Ray-Ban
emotionally.
glasses. And so was Oprah.
Apparently. Let's get to this final story. New York Times tech workers going on strike. 600 software developers and others who run the back-end systems behind the company's digital operations walking out just before Election Day. The two sides negotiated until Sunday and failed to come to an agreement. Talk about timing.
Yeah, and that's actually the comment from some of the executives over at the New York Times. Really, guys, it's disappointing that you choose this time. Of course, the tech workers say for their behalf, we've worked incredibly hard to try to lay the groundwork so that there will not be any disruptions. The key issue here is this comes at one of the highest volume times when everyone's pressing refresh, refresh, refresh. Do you have any potential victories to announce?
All night. And maybe for days, and possibly even weeks. Let's turn back to markets. Traders counting down to the US election and bracing for big swings on razor-thin margins. Kelsey, Berro of JPMorgan writing, price action has been choppy in recent days as investors look to manage positions before the elections. After elections, however, markets tend to refocus on the prevailing fundamentals. This is likely to be true again this year, with the exception being in a sweep outcome. Kelsey joins us for more. Kelsey, good morning.
Good morning.
Can we talk about that exception? Why would the sweep change things so much for you?
Well, essentially, there's a number of different things that we can focus on. There's the four key outcomes. You have divided Congress or divided government with Harris or Trump, and then you have the sweep outcomes. The sweep outcomes are where the market is going to be focused on a real shift in the fiscal trajectory that causes the Fed, that causes the markets to have to consider that the current path for the economy may be altered. So that's really the scenarios where I think that there is still a lot of uncertainty around how that path is going to be altered. In a divided government, I do think that we're going back to more of a status quo where we can refocus on the fundamentals, which is the way that we've been positioned all along. That's growth that's healthy, jobs that are slowing, wages that are moderating, inflation under control. Essentially, the expansion continues.
So take us inside your emergency playbook that you have out on your keyboard this evening as you watch the election results come in. Are you basically saying if you get divided government and signs of that, buy bonds? If you don't get divided government and you get some sort of sweep, then it's less clear, maybe sell, maybe don't have conviction. What sort of are the trades that you're looking for?
It's probably too simplistic to put it like that. So you have four outcomes that are the key outcomes. But, talking to our colleagues, for instance, in Market Insights, David Kelly, their playbook has 10 different potential scenarios. So within those four scenarios, there's all of this gray area that we need to manage. And I think the key is with all this uncertainty is really not to get distracted and use this as an excuse to stay in cash. So our motto has been follow the alphabet, the ABCs, anything but cash. So don't use this kind of noise as an excuse to distract you from the opportunities that are out there within the financial markets and particularly within fixed income. We've had a remarkable trend of strong growth. Real final sales has been rock solid around 3%. Companies are doing well, and you can still build portfolios of bonds that yield 6 to 8% right now that we think are very well positioned for a variety of outcomes.
So you say anything but cash, but tonight cash is actually incredibly helpful because what a lot of people are looking for is potential dislocations in the market that they can take advantage of. How much are you looking to take advantage of specific dislocations? What are they that you are looking to go in and buy?
That is a good point. So we don't have any specific edge. I don't think anyone has any specific edge over these outcomes. But what we do have is setting ourselves up for flexibility to take advantage of anything that does become dislocated, particularly in the rate space, in the FX space. We've been looking at swap spreads, which have become very, very negative. That's a potential trade that has been focused on by hedge funds that are looking at the deficit moves. These are all things that we're looking at. And when I kind of take it back to, where should the 10-year yield be in a status quo scenario, one where we refocus on the fundamentals, following the elections, based on the growth backdrop, based on the inflation backdrop, one that inflation is pretty close to 2, growth is healthy, but it's slowing. The Fed is cutting. They can continue to cut next year. I would say that's a 10-year yield around 3.5 to 4. Why are we not there now? I think it's pretty clear there's a decent amount of term premium in the market.
Take out the data, though. Where's the 10-year yield if Trump wins?
I think you could see a knee-jerk reaction that brings the 10-year yield significantly higher, 4.5, 4.75. But it also really depends on not just what happens with the presidency, but all of those gray areas. So not just the 4 scenarios, but the 10 different scenarios. And we also don't know what he's going to focus on in his first few days in office. He has talked about many different policy initiatives, but which ones will he prioritize first? Are they going to be the things that are growth positive, or are they going to be the things that are more focused on, foreign policy and inflation, which the tariffs raise prices, but they're also dampening on growth. So we need to understand what order of priorities either candidate is ultimately going to take if they win.
But the knee-jerk reaction for Trump could be higher yields. What's the knee-jerk reaction for Harris? Is it as low as where you think the 10-year should be trading at 3.5%?
So I think that you do see some trades that have already been put into the market that suggest that, if we were to see a Harris win, then you could see yields move a bit lower. But again, it really depends, refocusing back on the fundamentals. So to us, one of the most important things that we were watching last week was the jobs report, because I think there was a lot of uncertainty about if the labor market was actually reaccelerating here. And we were under the belief that no, the labor market actually is still cooling. That number in September is an outlier, and we're going to see it in the revisions. So what I've been doing is, when I look at the labor market data, I just look at everything through September. If you include October, I mean, you're creating an opportunity where you're likely to get whipsawed. But if you look through September, I think it's pretty clear. The labor market is still slowing, inflation is still cooling, wages are still moderating. That's generally an environment that's fairly good for fixed income.
This might be a short news conference on Thursday, don't you think? Sort of open it up, read the decision, close the book, thank you, head for the exits.
We cut by 25 basis points, nobody cares, go back to watching the elections. Cool,
thank you,
bye.
Goodbye.
Or every political question, there's going to be no comment.
No comment, no comment. Kelsey, it's good to see you. Good to catch up as always. Kelsey Berro there of JPMorgan Asset Management. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Yum Brands saw its sales fall more than expected in the third quarter. Growth at Taco Bell failed to offset ongoing weakness at Pizza Hut and KFC. The fast food operator's overall comparable sales has declined 2%. KFC, for its part, posted a third straight quarterly decline. Taco Bell saw comparable sales rise 4%. Restaurant Brands, the owner of fast food chains Burger King and Popeyes, also missed sales expectations. Wells Fargo is set to begin the first ever contract negotiations between a big U.S. bank and unionized employees. The bargaining will happen today at a branch in Albuquerque, New Mexico. The location unionized last December, making it the first branch of a big U.S. bank to do so. So far, 22 Wells Fargo branches have joined the vote to unionize. The Cleveland Cavaliers are the last undefeated team in the Eastern Conference after they beat the conference worst Milwaukee Bucks last night. Darius Garland had 39 points with 7 three-pointers along with 8 assists for the Cavs. They currently hold a 1-game lead over the defending champs, the Boston Celtics. And in the Western Conference, the OKC Thunder improved to 7-0 after a dominant win over the Orlando Magic. And that's your brief. John.
Danny, thank you. We'll see you in about 30 minutes. Up next on the program, the final word.
4 years of Kamala have delivered nothing but economic hell for the American workers and the auto workers, all workers. Her inflation disaster has made life unaffordable.
Up next on the program, The View from the Trump campaign. Then 30 minutes later, we'll catch up with Mark Cuban for The View from the Harris campaign. Equity futures up 0.1%. Bond yields higher by 4 basis points. The 10-year 4.32. Under surveillance this morning, the final word.
4 years of Kamala have delivered nothing but economic hell for the American workers and the auto workers, all workers. Her inflation disaster has made life unaffordable and cost families over $30,000 in higher prices. We've got to get the prices down, and we will. We will launch the most extraordinary economic boom the world has ever seen.
So here's the latest. Trump closing his campaign with promises for a better economy. Scott Bessent of Key Square Group, a top economic advisor to the former president, telling the Financial Times if Trump wins the election, he won't weaken the dollar. Bessent also defending Trump's pledges on tariffs, saying at the end of the day, he's a free trader. He's escalate to de-escalate. Scott Bessent joins us now for more. Scott, welcome to the programme. And first of all, sir, thank you for being with us, because I know that rally wrapped up at gone 2 a.m. Eastern time. So you've only just landed, I believe, down in Florida. So, Scott, share with us. Here's my question for you and for Mark Cuban this morning when we catch up with Mark a little bit later. If you're an undecided voter this morning, waking up and you're going to the polls and you still just can't get there, Harris or Trump, what's your message to them?
Well, it's quite easy because the choices are quite stark. And we have a very unusual situation here because we've had a real-time experiment. We had a Trump presidency that delivered low inflation, the high real wage growth, and the good economic growth, especially for working Americans. Working Americans actually saw their household net worth increase more than the top percentiles. We also have an experiment with Vice President Harris and Joe Biden, where we had the highest inflation in 40 years. The bottom 50% of workers are getting crushed. I call it the 3 I's: inflation, interest rates, and immigration. And if you want more of that, then you should vote for it. But it's a very unusual situation where both candidates have run policy.
Scott, when Trump left the White House, though, unemployment was at 6.4%. Today, it's at 4.1%. This is very low unemployment.
And Marie, that's a bit of sophistry. Is that was COVID, and you know it. Why don't we stop the clock at January 2020 and go from there? And it was one of the strongest economies ever.
So let's talk about some of the president's policies then. You say he's not going to weaken the dollar, but he gave an interview with Bloomberg Business Week and he said the strong dollar is actually a problem. Why do you think he actually won't try to weaken it?
Well, I think that he believes it's a market reaction, and I also think he understands that tariffs have the tariffs cause a stronger dollar, so a weaker dollar with tariffs is it's an economic abnormality. So I think we could see what's called the dollar smile, which you start out. Right now we have high interest rates, high deficit, and if you were still inflation above target. If you were to get inflation down to or below target through deregulation, through energy, then interest rates could come down, and you would have a market-based dollar depreciation. But in terms of an overt weak dollar policy, I wouldn't expect that at all. And the other thing too, if we go back to what's the pitch. And I'm very interested to hear Mark Cuban say this, because I think what I find very odd with the Harris supporters, especially the Wall Street and billionaire class like Mark Cuban, the wink and the nod is, well, she's got these crazy policies, but the Republicans are going to have the Senate, so you don't have to worry about these policies going through. So if half of the Harris supporters are saying the reason to vote for her is because there'll be a Republican Senate, that's quite odd, where 100% of the people who are voting for Donald Trump today want a Republican trifecta. They want him to be able to implement all his policies. So that's going to be a very interesting conversation. I look forward to watching it.
Scott, but the Trump campaign says Kamala Harris stole some of his key proposals. So did they steal them, or is her proposals, what you're saying, are actually a little bit too crazy?
Well, I can tell you that the tax on unrealized capital gains, I've been doing this for 35 years. I've done business in over 60 countries, and that is the worst idea that I've ever seen. It is a death spiral for markets, for capital. And when David Merv decided in the presidential debate to 2-on-1 President Trump, and he said, oh no, Kamala Harris isn't a communist because a communist seizes the means of production. Taxing unrealized capital gains is seizing the means of production.
Scott, you raised a question.
She's walked back a lot of things, and this is not one of the things she's walked back.
Yeah, Scott, you raised a lot of points here. And I think that one really interesting point is that one of the arguments that people make about Kamala Harris's policies is a lot of them won't go into effect. You could say the same thing about Donald Trump's policies, that a lot of the crazy ideas with the tariffs or potentially that could be destructive to growth won't go into effect. And as soon as he sees the stock market tank, he's going to reverse course. Is that true?
Well, but again, Lisa, that would be Donald Trump's decision. It would not be because he didn't want to. With Kamala Harris, it would just be because she's unable to do it. Let's look what she did when the Democrats had the trifecta. She was the tie-breaking vote on the Orwellian named Inflation Reduction Act and the American Rescue Plan. $4 trillion of spending that set off the biggest inflation in 40 years. So if you want her to have the trifecta, have at it again.
Well, hold on a second. But Scott, a lot of people who come around this table who are analysts and in the financial markets say that a red sweep with President Trump would cause inflation to go up, would cause bond yields to go up. That would be the most bearish situation for bonds. Are you disagreeing with that? I mean, essentially, that would be considered more inflationary, potentially, than anything that Kamala Harris could do.
Well, I think it's absurd to say that Donald Trump would be inflationary. If bond yields go up, they would be going up because there is a growth impetus, and the market would price in a higher growth trajectory. In my mind, it will not be because inflation will be going up.
Scott, it's good to hear from you. If you can stay awake for 30 minutes and watch the Mark Cuban interview, we look forward to your feedback. Thank you, sir. Looking forward to tonight. Scott Bessent there of Key Square Group. Coming up in the next hour, we'll hear from Mark Cuban, a Harris donor, a minority owner of the Dallas Mavericks. That conversation in about 30 minutes.
Be interesting to see what Mark Cuban has to say, especially since he has been out and about supporting her every single day. He's almost like the Elon Musk because he's a donor, because he's a billionaire, except he's a little bit less, jumping off on
Where's
stage.
Where's his $1 million a day giveaway? Where's his?
Oh, is that what you're going to ask him? Are you going to open that up?
That's what I want to know.
Why aren't you giving people $1 million to sign up for the right to vote for
money?
arms?
Where your mouth is. All that
Is that what that is? That's what that's called.
Is it a lottery or is it a job?
Still don't know. The judges decided it's one and not the other, so there you go. Coming up on the programme, Cameron Dawson of NewEdge Wealth, Neil Dutta of Renmac, Dallas Mavericks minority owner Mark Cuban, and our team covering the Trump and Harris campaigns. From New York, the third hour of Bloomberg Surveillance. Up next.
There is a very bearish setup of the investors going into the election day.
As the presidential race goes, probably those Senate races go.
The polls are razor thin in the states that matter, in the communities that matter.
There's a very big difference between what voters in the swing states feel are important issues.
There's a lot of conflicting signals, most of which are showing this to be a tie or toss-up race.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
90 minutes away from the opening bell, your scores look like this on the S&P 500 across the equity board. Elevated just a touch on S&P 500 futures up by 0.2%. On the Nasdaq 100 up by a third. In the bond market, big start to the week for fixed income, big rally through this bond curve. The 2-year bounces back, yields up by 3 basis points to 4.19. On a 10-year up by 4 to 4.32.51. Mike Wilson of Morgan Stanley on this program yesterday said that this would be a market clearing event, that we could get up to 6K on the S&P 500. Is it that, or is it a defining event for the next 12, 24 months?
It depends on what the outcome is. It seems like the bar is high or low, depending on who you talk to, for something that could truly be formative. Ultimately, though, it doesn't come into who's at the top of the ticket. And I feel like I'm just basically parroting everything that you're about to say or have been saying, which is it really has to do with the composition of Congress. And as we heard from Kelsey, Berro, basically the gray details that we have to parse throughout the night.
The composition of Congress is really important for things like tax cuts to make sure that we don't blow through the debt ceiling, which is going to be a fight starting January 1, 2025. But when it comes to tariffs, that is where actually the executive branch can act alone. Not on everything, because there is some legal precedent potentially how big the wall potentially could go up. They would need Congress's backing. But that is the one area where if Trump wins, he can do that unilaterally on day one.
That's why you have to split up these trades. There are tariff trades, think dollar mex, and then there are basically bond market trades, tax cut trades, higher yields. Think about what this could mean for the Federal Reserve. There's a lot on the table for the next 12 months.
Yeah, especially at a time where either candidate is going to expand the deficit. You look at the ranges, and some of the nonpartisan projections have the base case for Donald Trump raising the fiscal deficit over the next 4 years to by $7.7 trillion. Kamala Harris is only $3.7 trillion. Nonetheless, what you're talking about is a much deeper deficit at a time where there is no attention spent right now, paid attention to just in terms of how you offset this and create a more fiscal and plausible future.
I go back to what Mohamed El-Erian wrote in the Financial Times this morning. He's like, these election promises do not mean they're going to be policy. Look at the tax cuts that just this election cycle has introduced. Corporate tax rate, 15%, 28%, red or below. No tax on tips. Everyone seems to agree on that. Social Security exemption, extend the 2017, all of those tax cuts, $5,000 tax credit, consider eliminating federal tax incomes for first responders. Harris, expand the child tax credit, increase corporate tax rate, increase capital gains tax, proposal to provide $25,000 if you're buying a new home. Is any of this really going to happen?
I think we're all exhausted by all of this, aren't we? It's gone on for months and months and months. We've had assassination attempts, a last-minute candidate change. Over the last 2 months, we're all trying to get our hands around fresh policy coming from Harris, who's trying to redefine herself away from the person we knew back in 2019. And once you've got through all of that, can you imagine being in Pennsylvania and you face down $1.2 billion worth of ad spend from these two campaigns over the last few months? Those numbers are incredible.
Which means that people are really sick of hearing them, but they also feel a little bit more political urgency, as we heard from David Gura down there. What I thought was interesting is the corollary, the knock-on effects. 1-800-Flowers came out and said media is more expensive. The election does have a big, big impact on what we pay for things, both digitally and in traditional media.
Can't advertise.
You can't advertise because how can you go up against that incredible wash of money?
Getting crowded out over the last few months. Do you think that's why Marriott are seeing spend on hotels coming down?
Because they're not able to advertise in Pennsylvania and in Michigan.
Futures on the S&P up by 0.2%. Coming up this hour, Cameron Dawson of NewEdge on the election boogeyman that could spook markets. Neil Dutta of Renmac following US economic data. And we'll catch up with the Dallas Mavericks minority owner, Mark Cuban, making the case for Kamala Harris. We begin this hour with stocks on hold on the last day of voting in America. Cameron Dawson of NewEdge writes the following. Given how tight polls and odds are, we see the election as a source of near-term volatility, regardless of the result. Each side has boogeymen that could spook markets. Cameron joins us now to talk about those men. Cameron, who are those men?
Well, those men certainly are things like higher deficits, higher corporate taxes, tariffs, and immigration. And I think Anne-Marie's point was really important, is that if we think of the tariffs line of things, it doesn't necessarily matter about the makeup of Congress, that we could see them if Trump is elected, which is certainly some of the questions that you've seen raised by the bond market and considering potentially stickier inflation. So we think regardless of who wins tonight or whenever we get those results, it effectively is going to be a surprise because those polls are so very tight, which means that it could be a volatility-inducing event. I think it's important to note, though, that markets aren't necessarily primed for volatility to continue. You've seen a huge buying of put options for the VIX, effectively people betting on volatility collapsing post the election. So again, this could simply be a surprise, and it could cause that higher volatility, given the fact that people aren't necessarily positioned for it.
I want to pick up on that point because you see this across a range of different volatility metrics. Basically, people expect volatility price swings to really peak tomorrow and then absolutely fade off as we get results and go back to some sort of status quo. From your vantage point,
How much are you looking to actually take advantage of something that could be more significant? How offsides would this market be? And what would you do with that?
We always try to see volatility as opportunity. And I'd raise the question of if we would be seeing this volatility, even if this wasn't election day. If you look at things like S&P 500 momentum and breadth, they've all been deteriorating over the last month. You've also seen a deterioration in forward earnings estimates. You've seen estimates for 4Q as well as 2025 get cut and trimmed. So I would raise the question of if we could have this volatility, even if this was not election day, simply because you have a lot of digestion of the strong gains that we've had year to date and kind of putting some of the seasonality aside, given that deterioration in breadth and momentum, that just sets you up for a little bit more churn.
At this point, Cameron, you have to understand, I have to understand, and I don't understand exactly how much we've already priced in some of these trades, what these trades actually are. I'm thinking in particular in the bond market. People have been wondering, you strip out the political influence, what does the 10-year yield look like? Do you have a sense of that?
Well, we do know that there has been a relationship, whether it's correlation, causation is up for debate between Trump's odds of winning and the 10-year Treasury yield over the last 3 months or so. That certainly broke down at the end of last week, where Trump's betting odds started to fall and you still saw the 10-year Treasury yield moving higher. We think the source of that 10-year Treasury yield moving higher really comes down to the bond market digesting the fact that you have a relatively resilient economy that is supported by higher deficit spending at the same time as you have a Fed that's talking about potentially hundreds of basis points of cuts to get to their idea of neutral, which could have the potential of effectively throwing lighter fluid on some of this tightness within the economy, the fact that you still have overall easy financial conditions as well. And that seems to be the reason why you're seeing these bond yields move higher, not necessarily the election or just the election.
The why is important, Cameron. The why is important because I think it dictates how to trade equities, to some extent at least. Would you say yields have been rising then for good reasons and not bad? And is it a reason to stay long equity markets?
I think the answer to that is in high yield spreads. If yields were rising for bad reasons, that the Fed was tightening policy and it would eventually result in much weaker growth, you would see high yield spreads widening out. But they continue to remain very contained and actually making new year-to-date lows, which says to us this is not a market that is necessarily in fear of growth. It's not priced for a growth slowdown. Now, you could see that as a risk going into 2025 if you start to see a deterioration in economic fundamentals. But effectively, the credit market is telling you that yields are rising because growth is resilient. So watch those high-yield spreads very closely.
Would you expect it to remain that way even if we got a sweep from the GOP in the next 24 hours?
I don't necessarily know if any of the policies that would be enacted by a GOP sweep would necessarily affect growth in 2025. Let's put tariffs and potentially immigration to a side, because that is certainly something we could see without a GOP sweep. But the question and the risk for a GOP sweep really is something that's contemplated later in 25 and into 26, where we will be negotiating those $4 trillion of tax cuts, potentially adding a lot to the deficit, which is certainly something that the bond markets might push back on, but that's not necessarily something that we deal with in the next couple of months.
Cameron, a couple of months ago, people who came on this show talked a lot about how this could be a transformative event, how this could mark the difference in an economic cycle with respect to inflation, with respect to growth. As we've gotten closer to the event, people have revised that view. Suddenly, people are saying, actually, we just need to get past it, and whatever the result, things will keep on going on the way they were before. Where do you fall on that?
The best news that we always try to bring clients back to is that if you look historically, that the S&P 500, regardless of the power balance within DC, has been able to do what it does despite of or in spite of what goes on in DC. And that's really good news, which just means that overall corporate earnings have been able to operate in times regardless of uncertainty and pressures of what's going on within policy. And it's something that we always try to remind clients of, just so that the way that they don't respond too emotionally to what is, for many people, a very emotional election day.
Cameron, we know the markets like certainty. What if it is a contested election? What's going to be the impact?
Certainly, that would be potentially a source of volatility. It's not necessarily volatility that would last for a long time. So it gets back to Jonathan's first question of if you do see volatility, is it buyable? We think the answer is yes, that as you start to digest some of these deteriorations in breadth and momentum that could be happening regardless of the election, you get the narrative of uncertainty behind it, then you set up for effectively a great buying opportunity into year end with that potential Santa Claus rally and year end chase. So a source of volatility, not necessarily a source of investment decision.
A good framework for thinking about this market into year end and beyond. Cameron, thank you. Cameron Dawson there of NewEdge Wealth. If you are just joining us, bond yields higher at the moment, up by 4 basis points now, Lisa, approaching 4.33. So taping back some of that rally from yesterday.
Basically, nobody knows anything, and basically people are trying to de-risk and then re-risk. And what you can see, maybe this tracks the predicted odds or some of the other prediction markets odds that do show Trump once again gaining a slight edge. Other people say that these markets are completely skewed and don't listen to them at all. I will just say this. I do think it's important to take notice of that auction yesterday. It was a messy one, and it was a 3-year note auction. We've got a 10-year one today, a 30-year one tomorrow. Supply is going to be harder to digest in a time of incredible uncertainty.
What's that Spider-Man meme when they're sort of looking at each other and doing that? Do you know that one?
I do, but I don't really know.
Okay, never mind, Lisa.
But that's
Equity futures positive, up by a little bit on the S&P. We'll park that. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Boeing employees have voted to accept a new labor contract, bringing to an end a crippling 7-week strike. Nearly 60% of workers voted in favor of the new deal. It will see wages increase by 38% over 4 years and enhanced retirement contributions. Hourly workers start returning to factories in several states as soon as Wednesday. The breakthrough marks a big win for the new CEO, Kelly Ortberg, as he aims to rebuild the company's culture and improve the quality of work in its factories. Goldman Sachs will add the most executives to its partnership program in the era of David Solomon. The promotions will be announced this week, and people familiar tell us that they will exceed the prior high of Solomon's 80 people in 2022. It's a big shift for the chief executive, who had preferred a smaller partner class to reinforce the aspirational nature of the rank. This time, Goldman had to both replenish its pool of partners who've left and is enjoying a spell of performance breakout. Monday evening, Joe Rogan announced his endorsement for former President Trump. In a post on X, the popular podcaster praised the, quote, great and powerful Elon Musk, saying he made the most compelling case for Trump you'll ever hear. The endorsement could offer a boost to the Trump campaign, given Rogan's popularity among young men, a key voter demographic for the candidate. And that's your brief. John.
Danny, thank you. When we look back at everything, when all is said and done, I do wonder if we'll look back at that as a big missed opportunity for Kamala Harris to sit down with Joe Rogan.
She had to go to his studio, which was part of the problem, and their election scheduling, but she chose to go at SNL. And if you're watching SNL, which is definitely more old school, less new age, you're probably voting for her. Joe Rogan would have put her in front of 15 million men. And this is a source that actually she needs to shore up.
We'll see if we're talking about this tomorrow morning or not. Up next on the programme, the Morning Calls Plus, we'll go to the critical swing states of Georgia and North Carolina. That's all around the corner. Up next, after the commercial break, this is Bloomberg. The opening about 1 hour and 13 minutes away. Equity futures on the S&P up by 0.1%. In the bond market, yields higher by 4 or 5 basis points. The 10-year 4.33. Let's get you some morning calls. First up, Wedbush raising its price target on Palantir to 57, highlighting its robust quarter and accelerated deal momentum. Your second call from Bernstein upgrading eBay to outperform, saying the recent pullback in shares offers a better entry point. That stock is up by 1.5%. And finally, JPMorgan raising its price target on Dollar Tree to 82, emphasizing its commitment to a formal review of strategic alternatives for Family Dollar. That stock is up by 4%. Let's turn back to the election with 2 battleground states in focus. We've got team coverage with Bloomberg's Brett Pulley in Atlanta, Georgia, and Anna Edgerton in Raleigh, North Carolina. Let's get to you first, Anna. Can you walk us through how well things are turning out in North Carolina, just in terms of the process, given how hurricane hit the western part of the state was only a month or so ago?
Yeah, we've actually seen remarkable turnout in those western states that were devastated by Hurricane Helene. Of the 25 counties that were impacted, only 3 had turnout rates in early voting that were below the state average. Across the state, we see Republicans and Democrats taking a really different strategy to their ground game. Republicans have focused much more on community, on their grassroots activists, saying that they have more trust from their friends and family to get out and convince them to vote for Donald Trump. Democrats have a really impressive army of volunteers here. They say they've had 45,000 people sign up to volunteer since Kamala Harris became the nominee. And those volunteers, they said, have knocked on 1.7 million doors across the state. I talked to 2 of those volunteers yesterday, and they said they're still finding undecided voters. And they are able to talk to them about Kamala Harris, tell them about her as a candidate, and encourage them to get out and vote today. We're going to look and see the turnout from both parties and that really crucial block of unaffiliated voters here in North Carolina.
Brett, let's bring you in. In 2020, Biden became the first Democrat to win Georgia since Bill Clinton in 1992. What does the ground game look like in this crucial state for both camps?
Well, both of the candidates have certainly focused a lot here in Georgia. They closed out on Sunday former President Trump in Macon and Kamala Harris in Atlanta, and that was those were both one of many, many appearances. You know, it's unusually foggy and low visibility here in Atlanta today, which of course is Georgia's largest city. But it seems that one thing that voters, I think, across Georgia can certainly see is an end in sight to what has really been a tumultuous campaign, especially here in this state. It feels like, as you alluded to, it's been going on since 2020. Of course, this is a place where the former president committed the alleged crime of asking to find more votes. And this is also where President Biden was like a deer in the proverbial headlights during the debate, which led to Kamala Harris being on the top of the ticket. Secretary of State Brad Raffensperger said yesterday that people in the state have already voted in tremendous numbers, over 4 million people during early voting, another 1.1 million expected today, and it should be interesting.
So when will we find the results, Brett, of Georgia? Because, of course, we all remember the recount that took place. When will we get the final results from this state?
Well, look, 80% of the counties are required. They say about 80% will have their votes into the Secretary of State's office within 1 hour after the polls close this evening at 7 p.m. And so it looks like the votes will come in. The big question is, to what extent will it be contended? There are a lot of things that have been put in place by the state's election board, which is mostly Republican controlled as of recently. That could lead to potential challenges. There have been legal challenges in the courts in recent days. Yesterday, the Republican Party won a challenge asking that relatively, I think, small number of votes not be counted because they were absentee ballots that will not get back in time, that were mailed out too late as a result of problems within that county. So there are all kinds of things kind of hanging in the balance that, depending upon the outcome, could make it a long time before we know.
And we are being prepared for that and hunkering down for that. Anna, from your vantage point in North Carolina, it's a state that Donald Trump has gone to a number of times, repeatedly over the past few weeks. I'm just curious what you're watching. Is it the suburbs? Is it the urban areas? Are there specific sectors? What intel are you hearing on the ground?
Yeah, that's actually a really interesting point, because this was the only swing state that Donald Trump won in 2020, although it was his most narrow victory. And so the fact that he has spent so much time here, 2 rallies on Saturday, 1 on Sunday, another one yesterday, shows that his campaign is not taking anything for granted. We will be looking at those ring counties around around metro areas, these suburban counties that have changed a lot since the 2020 election. There have been hundreds of thousands of people moving to the state, registering to vote. And so the big question is whether whether they're going to vote more like the rural counties they used to be or more like the suburban counties they're quickly becoming. So that's going to be really important. Also watching Republican turnout today. Republicans had a really strong showing in early voting, and the question is whether or not those are people who would have voted anyway today, or if Donald Trump is converting new voters to his cause in his campaign this year.
I think we all know someone who's moved to North Carolina in the last 12 months. I know several people.
Do you
Anna,
really?
thank you. Yeah, really. Anna Edgerton, Brett Pulley, to the two of you, thank you. I'm pleased Brett brought up the debate back in July. I just imagine, and I can't get into the heads of people, none of us can, of course, although some of you claim to, but I can't. If Biden and Trump agree on one thing, it's that they wish they never did that debate back in July, for sure.
And if Harris wins, the Trump campaign is going to look at the potential errors along the course, and that would be number one. Why did they agree to this debate before the RNC, before the DNC? Because can you imagine that debate was in September or October before this election? Biden's poll numbers fell off a cliff. The donors were calling and saying there needs to be a change. Speaker Pelosi basically said, we're still waiting for your decision. Until it's the right decision, we're not going to accept it. That debate was seismic for this election cycle because it meant they're no longer the incumbent president was at the top of the ticket, and it brought in Kamala Harris, who then had to re-identify herself, but also it brought fresh enthusiasm and a ton more money. We're talking about all this ad money in Pennsylvania across the swing states, $1.8 billion, is it? Well, guess what? All of that fresh money was coming because of that change, because of that debate.
They were most passionate about the golf game. I can just imagine if they had really continued on that vein, if it had been those two candidates, we'd hear a lot about, no, you don't have that bogey, give me a break. I mean, we'd hear a lot of that, I think, coming out of the campaign. And instead, it's a little bit different. I will just say, it does highlight how topsy-turvy this entire campaign season has been.
Hasn't Donald Trump been going after Mark Cuban's golf game as well?
It's a very sensitive point, I hear.
Very sensitive, low club head speed, apparently.
Are we going to ask him about that? Is how you're going to open it up? Do you have a low head?
Just absolutely ridiculous, the whole thing has been. We have got some economic data for you in about 5 minutes' time. We've got the trade balance a little bit later this morning. And then later on at 10 a.m. Eastern time, some important data. ISM services for the month of October. I know a lot of this is being overlooked this month for obvious reasons, but that's an important data point this week.
Yeah, big question about whether you can continue with the expansion, and kind of to the point that Kelsey Berro was making, are we slowing down? Is this an economy, if you take a look at the averages, that actually is losing a bit of its momentum? I love this quote. I have to just read it to you.
Sure.
From Jason Thomas over at Carlisle. Like a tree falling in the woods when there's no one there to hear it. The Fed convenes this week for the second to last FOMC meeting of the year. There is economic data. There are things that we otherwise would be focusing on. We will be covering it all, but no one seems to be.
We'll have special coverage of Fed Decision Day.
We will.
Right here on Thursday. I might have to change ties, but I'll still be here. Same suit, everything. Not leaving.
This will be fun.
In the next 30 minutes, Neil Dutta of Renmac, and we'll catch up with the Dallas Mavericks minority owner, Mark Cuban from New York. This is Bloomberg. Economic data drops in about 20 seconds' time. Equity futures going into that positive by 0.2%, up by a third on the Nasdaq 100. In the bond market, big move to start the week. Big rally. Treasury yields aggressively lower across the curve. We bounce back a little bit right now. We're up by 4 basis points. The 10-year 432.72, up 3 at the front end of the curve. The 2-year up to 419.10. Around the table with us, Mike McKee with some breaking economic data. Good morning, Mike.
Good morning. Economic data back in the news. Who'd have thought it? I mean, but Thursday, reminder, we get the Fed again. $84.4 billion for the trade deficit, which is just a little bit higher than anticipated. 84 flat was the survey number. 70.8 is the revised prior month. Now, we basically knew these numbers because they give us the advance, but it does tell you a reason why growth was a little bit slower than had been anticipated. This took some of the growth out of the United States, but it is going to be interesting for the Fed on Thursday because we're going to be asking about this, and we're going to be asking, well, if we don't know the winner, and if the winner is not Harris, then we're going to be asking about tariffs. The Fed did model in 2018 what would happen with tariffs because Trump was putting tariffs on at the time. They predicted it. Inflation jumps, consumer spending falls, business spending falls, markets go down because lower earnings in prospect. So they could either their model said we could either raise rates to deal with the higher inflation, and that would probably lead to recession, or we could look through it and hope that the inflation is short-lived. And if it's not, then we got to raise rates anyway. So it's a tough dilemma for them. And they don't. This was a staff forecast.
Yeah.
They don't know what they would do, and they don't know how bad it would be, but it wouldn't be a good thing.
You'll be there on Thursday. Mike McKee, let's bring in Neil Dutta of Renmac to weigh in on some of the economic data we've seen. And Neil, look ahead to that Federal Reserve decision on Thursday. How straightforward is this for the Federal Reserve on Thursday? And does it get harder in December?
Well, in my opinion, no, it does not. I mean, I think we should expect rate cuts at each of the next two meetings. And I think 25 basis points is a lock. My only thing to say about December is at the moment, the markets are priced about 20% for a skip. I think that could shift a little bit towards, I think the left side of the distribution, meaning, I wouldn't be surprised for the markets to start pricing in a 50 basis point cut in December. I'm not saying that's what they will end up doing, but I think in terms of distribution of probabilities, cutting more is more likely than not cutting at all. So that's sort of how I'm thinking about it. The labor markets are clearly slowing.
Neil, do you feel like this economy is kind of on a path that right now is not going to get disrupted by the election joy that we've been experiencing? Or do you think that this really is a decisive moment that could alter that economic trajectory?
I mean, in my career, I just tend to tune out the political noise. I mean, yes, things can change in terms of fiscal policy, but I think it's not wise for the Fed to sort of front run these potential outcomes. I know there's been a lot of ink spilled on the so-called Trump trade in the financial markets, right? This idea that, the sort of tax cut extension, tariffs, less immigration will push up dollar and bond yields and so forth. But I think it's important just to kind of take a step back, think about, the sort of sequencing of events here. I mean, if you go back to the first time he was in office, tariffs were actually the first thing that was happening. I mean, the first thing that was happening was very market-friendly type stuff, right? Like deregulation and tax cuts. And no matter what happens, I think, the markets seem to be saying more of a chance of a unified sort of GOP government. I mean, I think the race is a coin flip, frankly, but it's not like they're going to be able to steamroll whatever it is they want through the Congress, because the Congress will still be very, very evenly divided, even if the GOP wins, particularly in the House. So I just think that there's a little bit too much kind of inflation risk premium baked in from a potential Trump win.
Neil, that final point, a really important one. We'll leave it there. Neil Dutta of Renmac on the US election and on the economic data and the Federal Reserve meeting that we've got to take place on Thursday. Let's keep it there on the US election. Kamala Harris outraising Donald Trump by nearly 5-1 among big donors in the final stages of the campaign. One wealthy individual supporting Harris is Mark Cuban, the minority owner of the Dallas Mavericks, and I'm pleased to say that Mark joins us now. Mark, welcome to the programme. We spoke to a Trump campaign advisor a little bit early this morning, and I want to start with you in a similar way that I started with him, which is basically I'm waking up this morning, I'm a swing state voter, I'm in Pennsylvania state, and I still haven't decided who I'm going to vote for. And I'm thinking back to how Harris talked about in 2019 that she wanted to ban fracking. I understand she's changed her mind, but I'm worried that she's a bit of a shapeshifter. She gets back into power and she'll change her mind again. How do you settle those concerns?
The world has changed since 2019. She's open-minded. She's talked openly about the fact that she wants to give dissenting opinions a place at the table with her. She's not dogmatic. That's how you explain it. And she's looking to put together the best policy. She said in 2020 that she supported fracking. So I think that's a non-issue. And in terms of, is she just an extension of Biden? Just look at Biden's budget proposal versus what Kamala Harris has actually proposed. Biden wanted much higher taxes. Kamala Harris came in at 28% for tax rate for cap gains and 28% for corporation, and did not say a word and will not say a word about unrealized capital gains. And so I think she's completely different. She's not a shapeshifter in the least bit.
Well, that individual we were speaking to, Scott Bessent, this key economic policy advisor to the Trump campaign, says that Harris, what he hears from a lot of Wall Street journals, that she would be moderated by a Republican Senate. And that's why Wall Street would be willing to vote for her, because of that moderating effect that she would get from a red Senate. Is there any truth to that?
Yeah, of course. I mean, balance is not a bad thing necessarily. I'm not opposed to a divided Congress. But the bottom line is, what will Kamala Harris do? And I think she's better for the economy in so many ways. There's 335 million people in this country. 4 million make $400,000 or more. The other 330 million make less. And she's been very specific that if you make $400,000 or less, your taxes aren't going up. In fact, for 100 million people, they're going down. The other big expense that every household is fearful of is healthcare expenses. Donald Trump has said he has a concept of a plan. Kamala Harris has been very specific on the pharmaceutical side, saying she's going after the pharmacy benefit managers, the middlemen, and she'll introduce transparency. I know from my own personal experiences with cost plus drugs, that'll lead to a 20, 30% or more deduction in the cost of medications for households and businesses. And then you've got tariffs. As Michael, I think it was, said earlier, tariffs are a bad idea. I mean,
well, if they're so bad, then why did Biden and Kamala Harris keep them? They keep the Trump
well, let's
era
talk about that, right? Because that's
on.
not completely accurate. First, look at the EU. Biden signed a deal saying that there would be no tariffs between the two, EU and United States, for the next 5 years. So those tariffs are gone. And then you look at what Trump tried to introduce. He had 4 years to try to implement tariffs that worked, and he got his butt kicked by China. The retaliatory tariffs almost destroyed the soybean and the farming industry, and he had to pay out $20 million. But as it applies to households, right, he's talking about a 60% across the board tariffs for Chinese imports. China makes just about every Christmas present that we buy for our kids. So families would be looking at a 60% or more increase in what they'd spend on Christmas. And the downstream impact of that would be significant to small and large businesses.
Mark, let's talk about something you've been very vocal on. This is regulation. You've said that you don't think Harris should keep Lina Khan at the head of the FTC on. And Alexandria Ocasio-Cortez, the congresswoman from New York, went to Twitter and she said billionaires like you, Mark, are trying to play footsie with the ticket. And if anyone goes near Lina Khan, there will be, quote, an out-and-out brawl. Where is Harris when it comes to things like the FTC?
I don't know. I haven't talked about personnel with her or her team. I have no intention about talking about personnel. I was asked a question about what I thought about the FTC, and I thought that the possibility of breaking up the big technology companies would be a negative, because I think, winning the AI battle for the United States is paramount from a military and an economic perspective. So I voiced my opinion, but I'm not involved in those conversations at all.
But it really raises this ultimate question, which is what policies will she follow? She's been engaging with AOC quite a bit in terms of the campaign trail. And there's a real question of how much there will be an effort to cater to the further left sides of the Democratic wing versus the sort of centrist appeal that she's been trying to have. How much are you actually getting confidence that she's going to have business executives in cabinet positions, in top areas where she really is listening to what they have to say?
I talk to her campaign almost every day. I'm 100% certain. I'm not just confident. I'm certain that that's what they're going to do. I've been on the trail with Doug Emhoff, who, as part of his presentation, talks about what a capitalist she is. She's talked about, wanting to create 25 million new businesses. That's not a reflection of anything far left. One of the first things she did was introduce a tax deduction or increase the tax deduction for startup costs to $50,000. That's very important. She recognizes that of the 33 million companies in this country, 99% are passed through, 99% are run by people making $400K or less. Those small businesses are what drive the economy. They create most of the new jobs every single year. So she's focused on an opportunity economy. I don't think she can be any more clear.
Mark, do you think that this campaign for Kamala Harris could have done more to reach out to the male voter? This seems to be an election that is unique in just how bifurcated the male and the female vote really has been. There were some questions around Joe Rogan and how to appeal to the male vote and how to really bring the genders together. What's your take on this campaign's approach to that?
I think it was very data driven. I mean, women have a high propensity of voting, and, with reproductive rights and other issues that were geared towards women, I think she did a great job of connecting to them. Maybe she didn't do everything she could have with men, but that's okay because she went to the people who are going to vote more. You go, as a business person, you go to the people you have the best opportunity to sell to. Who's going to buy your product? Who's going to vote for you in this particular case? And the fact that she's only been in the race 14 weeks and she's caught up completely and now I believe passed her and will win today, I think she's done the exact right thing.
Mark, speaking of business and product, there's a famous quote from Michael Jordan, which I'm sure you know well. Republicans buy sneakers too. It raises a question about you. I wanted to ask you about this. For a man who's got a line of businesses, why was this important to you to put your name and reputation on the line and really get deep into politics when ultimately Republicans buy sneakers too?
So I'm not going to get deep into politics, but I think this is a close election for a reason. And I think Kamala Harris will be the best president and is a better choice than Donald Trump. It's that simple. I mean, I love this country. I'm in this position because of everything this country has given me. I'm blessed. And I thought, I truly believe that she will be the better president for the United States of America. And that's the only reason I'm doing this.
Well, thank you for sharing your time with us this morning. We appreciate it, Mark, and hopefully we can catch up again soon. Mark Cuban there on the latest campaign effort from the Harris campaign.
Yeah, I really think he's the Elon Musk, closest thing to Elon Musk from that the Democrats have. And it's a great question you ask, because if you're a business individual, I mean, he says he's not getting deep into politics. Well, he's not a politician, but he is deep into politics. I mean, he is one of their biggest surrogates on the Harris campaign, and he's spending a lot of time and a lot of money trying to get her elected.
Certainly deep into campaigning. Your thoughts on your question and the answer you got to it about the male vote?
Well, following the numbers, the fact that women vote more than men, which is something that a lot of people have been talking about and leaning into. I don't know what the answer is, but I do think that there is a reckoning after this election about how divided male and female voters really are in this country. And I don't know all the answers, but I really want those discussions. I want to hear them, and I want to listen to what people have to say, because it is so notable, and I think that aspect has been unprecedented.
I think we all share that view. If you are just joining us, equity futures on the S&P up by 0.2%, with an update on stories elsewhere this morning. With your Bloomberg brief, let's cross over to Danny Berger. Hey, Danny.
Hey, John, a check on Palantir shares this morning, up 17% pre-market. It reported quarterly revenue that beat analyst estimates. It also raised its forecast for operating income in the current period. It cited higher demand in the U.S. for its AI software. Shares of Palantir are up 140% so far this year. Apple is exploring a push into smart glasses, setting the stage for the company to compete with Meta. According to people with knowledge of the matter, the tech giant began an internal study codenamed Atlas last week, which involved gathering feedback from Apple employees on smart glasses. More focus groups are planned for the near future. Meanwhile, shares of Wynn, those are falling 2% pre-market. The casino operator reported adjusted EPS for the third quarter that missed the average estimate. That was largely driven by the company's operations in Macau. Profits there were 10% below expectations. Wynn also said it had approved a buyback of up to 1 billion shares. The company's CEO saying that the results reflect healthy demand across its resorts. And that's your Bloomberg Brief. John.
Hey, Danny, thank you. And welcome to the programme to all of you. If you are just joining us, equity futures right now on the S&P 500 up by 0.2%. Just a flavour of the bond market for you. Yields are higher by more than 4 basis points now on a 10-year 432. Some important economic data about an hour from now. You get a PMI in the United States. Then 15 minutes after that, an ISM services read in America, which I keep saying, Lisa, and I know you agree, that's an important data point for this economy and for this market.
It has been the pillar that has really been holding up a lot of the engine of growth. It has not been in the manufacturing sector, which has been in recession. Key question, can you see that expansion continue at a time where we heard from Kelsey, Berro, we heard also from Veronica over at Morgan Stanley. There is a real, over at Citigroup, there's a real question about just how much momentum is in this economy.
Up next on the programme, we'll set you up for the day ahead, a very long day, and a week ahead, and maybe the month ahead, and we'll take you back to both candidates' headquarters as Election Day gets underway. .42 minutes until the opening bell, with equity futures up by 0.2%, yields higher by 4 basis points, the 10-year 432.31. As we count you down to the opening bell, here's the trading diary for the rest of this week. Today, the US presidential election plus US PMI data, Thursday, the Fed rate decision and another round of jobless claims, plus a rate decision from the BOE. And on Friday, if you're still around for this, UMich consumer sentiment data on Friday morning. Can you imagine being around for that?
10 a.m. I'm going to be sitting at my desk.
I'll still be waiting for numbers from Pennsylvania.
Yeah, exactly.
On Friday.
Aren't we going to get the ultimate consumer data when we find out the results of this election?
Yeah, nothing else matters after that, that's for sure. Let's turn back to the top story, Election Day in America. Our team coverage of the Trump and Harris campaigns for a final word. Bloomberg's Tyler Kendall in Florida, Skylar Woodhouse in Washington. Tyler, first to you. Walk us through the former president's day ahead of him.
Yeah, hey, John. So right now we are waiting to get inside the Palm Beach Convention Center. Security is incredibly high here. Secret Service doing their sweeps before former President Donald Trump arrives for his election night watch party tonight. But before those results, before that watch party, this election could really come down to which candidate did a better job of convincing Americans that they are best for the economy. When we talk about Trump's closing arguments, we saw him on the campaign trail yesterday doing what he calls his signature weave, but also at the same time trying to hammer home his own economic vision. For example, just yesterday, introducing a new threat of heightened tariffs against Mexico. So clearly trying to capitalize on this sentiment that we're seeing, that despite some recent bright spots and economic indicators, the economy remains the top issue for voters. And our Bloomberg News Morning Consult polling shows us that former President Donald Trump is currently leading Vice President Kamala Harris when it comes to voter confidence on the economy by about 5 percentage points. It is important to note, though, that in that same poll when he was running against President Biden, that gap was 14 percentage points. So clear that Vice President Kamala Harris has made some inroads when it comes to this issue, but that former President Donald Trump clearly holds the edge still when it comes to the economy.
Skylar, last night we saw the vice president physically knocking on doors in Pennsylvania, basically asking people for their votes in these final moments. What's she doing today?
The vice president is hunkered down here in D.C. today. She's at her residence at the Naval Observatory. For the pool, the call time is not until this afternoon. And what we know is that she will be doing media rounds with radio stations across all 7 swing states. So she is still out there, doing the media rounds, trying to connect with those last-minute voters in those key battlegrounds. But she, for the most part, will be hunkered down today, and we most likely won't see her until the election night festivities at Howard University, her alma mater. But the campaign really has been only in this race for a little bit more than 100 days. And last night, one of her senior campaign officials said that they are confident that Vice President Harris will win all 7 battlegrounds, and that was coming from David Plouffe, who ran Barack Obama's 2008 presidential campaign. And that is, potentially some wishful thinking, but I think one thing the campaign has done, that they've struck this balance, and even Harris has said it herself, that they are the underdogs, but they have a lot of momentum. So it'll be interesting to see how all of that momentum does play out with the first poll set to close in less than 12 hours. And I think that, we will see from the campaign how that momentum really plays out.
Tyler, what are you looking for in terms of what the Trump camp wants to see before they either declare victory or potentially sort of cede the election?
Right, exactly. So in recent days leading up to this, we've seen former President Donald Trump tell his supporters that this is their election to lose, despite all of the polls showing us that this is going to be an incredibly close race. That sort of rhetoric is raising concerns that he might contest the election results before they are even called, or if they are not called in his favor. It's important to point out that Trump and his allies filed at least 60 different lawsuits in the wake of the 2020 elections. Both sides of the aisle are gearing up for any potential litigation when it comes to this. We know the RNC as well as the DNC has been fundraising heavily, raising millions of dollars for any potential battles. And I would just quickly point you to a recent Bloomberg News analysis, which found that 165 lawsuits were filed between 2023 and today, Election Day, on everything from mail-in ballots to early voting. So it does appear that both sides could be gearing up for a potential litigation fight going into this week.
Expect and brace for more of that later on this evening. Tyler Kendall, Skylar Woodhouse, to the both of you. Thank you. Special coverage later on this evening. Election night 2024, 7 p.m. Eastern Time, right here on Bloomberg TV. The Bloomberg team at the election map, Katie Lyons, following the House and Senate races, Joe Matthew. On the markets, Lisa, Danny Berger and Anne-Marie trying to keep us all awake a little bit later.
Yeah, all awake for this evening and then potentially the rest of the week. You know, Tyler there was talking about the number one issue being the economy, which it has been the entire year. This ranks far and large the biggest issue hitting voters. But then we got this poll over the weekend from Iowa. And this poll came after this summer, Iowa put in one of the most strictest abortion bans we see across the nation. It's 6 weeks. And then you saw this uptick of women going out to vote. And not just young women, women 65 and over. Women who remember when Roe was stated, and now we remember who Dobbs when Roe was taken back. And you can think that this is about the economy, but there is this potential that these pollsters are underestimating the fact that more women are going to be going to the polls because of abortion. And you saw that in that poll. Remains to be seen whether or not that's going to be a harbinger foreshadowing what could potentially happen. If there's a pink wave or not, if it's the economy, certainly DJT has the upper hand.
There's an analogy between some of these political polls and some of the results we're getting in and the economic data. In terms of there are so many different stories behind each person, each industry, each area. The fact that Romaine said that in Michigan, it is foreign policy. It is some of the Muslim communities as well as some of the Polish communities where you hear about the economy in some places and in other places it's things like abortion. What I am struck by is how everyone has a unique story and has their own community that they forged online or whatever, and how it's so difficult to speak about any of this in some sort of overarching average.
2016, 2020, these polls are won on the margins. Biden won the blue wall with just 77,000 votes. You have to make sure you are going laser sharp into these different groups, which is why when you have maybe an unforced error saying Puerto Rico is an island of garbage, that could hurt you in a place like Pennsylvania, where there's some 500,000 Puerto Ricans living, and maybe some of them are going to go to vote after hearing that.
Let's wrap it up. I need to go to bed, and then I'll see you again at 7 p.m. Eastern Time. Coming up tomorrow, we'll still be awake. Anastasia Amoroso of iCapital, Mohammed Al-Erin of Queen's College, Cambridge, former Kansas City Fed President Thomas Honig, and Torsten Slok of Apollo. From New York City, that does it for us this morning. We'll see you later on this evening for special coverage of Election Night 2024. With equity futures on the S&P 500 firmer by 0.2%. That does it for us. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.